Ethiopia's first digital payments conference launched the national QR code standard, strengthening credibility and paving the way for the second digital payments conference. Keynote address by senior government and international leaders. Panel discussions on remittance, technology, literacy, interoperability, and policy issues. Fintech and ecosystem showcases. Networking and exhibitions. Governor's fireside chat on digital finance. Presentation of the 2024 to 2025 Digital Payments Performance Report. The launch of the 2026 to 2030 National Digital Payment Strategy and the Instant Payment System. Welcome to the second Ethiopian Digital Payments Conference. In 2024, Ethiopia held its first National Digital Payments Conference. Today, we continue that. In 2024, Ethiopia held its first National Digital Payments Conference. Today, we continue that journey with the second Digital Payments Conference, building momentum toward a stronger digital payments future. The voices that shaped the inaugural conference are now driving the vision forward, advancing progress toward Ethiopia's second Digital Payment Conference in 2025. Collaboration and innovation from the 2024 conference are fueling today's journey, turning ideas into action across Ethiopia's digital payments ecosystem. Ethiopia's first Digital Payments Conference launched the national QR code standard, strengthening credibility and paving the way for the second Digital Payments Conference. Keynote address by senior government and international leaders. Panel discussions on remittance, technology, literacy, interoperability, and policy issues. Fintech and ecosystem showcases. Networking and exhibitions. Governor's fireside chat on digital finance. Presentation of the 2024 to 2025 Digital Payments Performance Report. The launch of the 2026 to 2030 National Digital Payment Strategy and the Instant Payment System. Welcome to the second Ethiopian Digital Payments Conference.
Welcome you all to the second Ethiopian Digital Platform Conference, EDPC 2.0.
To welcome you to the second edition of the Ethiopian Digital Payments Conference, a platform that has become central to our national dialogue on how we modernize our financial sector and harness digital transformation for inclusive and sustainable.
It is a profound honor to speak at this important conference. Today is more than a discussion on digital payments. It is a moment to reflect on how far Ethiopia has come and a moment to shape the digital future we want to build.
We have even more exciting topics. We have about 5 panel discussions, and after lunch at 2 p.m. we'll have fireside chat with His Excellency, our Governor, and we also have time to network and to build more collaborations amongst us. For those of you, in case you haven't downloaded what we launched yesterday, the National Digital Payment Strategy, NDPS, we are going to put the QR code here, and you can scan it, you can download it. Yesterday, we also launched the Ethiopia IPS, another exciting moment. So yeah, that's what happened yesterday, and today we will go on and start with an opening remark, and I will invite His Excellency Solomon Desta, Vice Governor of the National Bank of Ethiopia. He's the Vice Governor of Financial Stability. Please let's welcome him to give us an opening remark for this morning.
Good morning. Your Excellencies, distinguished guests, leaders of the financial sector, development partners, ladies and gentlemen, good morning once again. The second day of the Ethiopia Digital Payment Conference, EDPC2, marks a defining moment in our country's digital transformation journey. This gathering is more than an annual event. It is a national platform where policy direction, innovation, and industry alignment converge. EDPC2 catalyzes collaboration by bringing together the entire financial ecosystem to evaluate progress, confront emerging challenges, and shape the next chapters of Ethiopia's digital payment evolution. As we convene today, we stand at the threshold of a future where digital payments form the backbone of our economy, driving inclusion, efficiency, and innovation across every corner of the country. EDPC2 signals a decisive shift from fragmented digital payment initiatives toward a coordinated national movement backed by a growing market momentum. By uniting regulators, financial institutions, policymakers, government institutions, and development partners, the conference aligns the ecosystem around a shared vision. It strengthens our collective commitment to cybersecurity, data protection, and consumer trust. It also sends a clear message to investors and partners that Ethiopia is committed to expanding digital financial finance, attracting innovation and investment into our market. For many years, our financial sector advanced in isolation, each institution processing at its own pace, each system improving independently, without any sort of integration. But now, with the official launch of the second National Digital Payments Strategy, we turn a new page. A core pillar of this unified action is the forthcoming national switch. This is not merely an infrastructure upgrade, it is a core system for our digital economy. The national switch will break down the walls between different financial institutions, ensuring trust, interoperability, so that a payment initiated anywhere can be received everywhere as well. It will reduce transaction costs. As you know, currently transaction costs are mounting and everybody is crying foul. So we need to work very hard in this regard. Accelerate settlement and most critically, enable the seamless integration required to bring millions of unbanked citizens into the formal financial system. The strategy focuses on building a robust, interoperable digital public infrastructure, like MASOB, as you know, that ensures secure and inclusive financial services for all Ethiopians. It aims to close long-standing inclusion gaps across gender, geography, age, and persons with disabilities, while driving wider adoption and a deeper use of digital payments. It achieves this by concentrating our efforts on expanding reach through aggressive deployment of agent networks and foundational infrastructure in underserved rural areas, building trust through targeted financial education campaigns, and fostering innovation by utilizing the regulatory sandbox to drive secure, value-added services. Yet, we must recognize the challenges ahead. We face infrastructure constraints, uneven digital literacy, and the daily growth of sophisticated cyber threats and frauds as well. Globally, digital financial innovation continues to outpace regulators. You cannot condemn Ethiopian regulators alone, it is a global issue. So, in response, we will continue refining our regulatory frameworks, strengthening licensing guidelines, and ensuring that consumer protection, data privacy, and cybersecurity remain at the core of our oversight going forward. Our ambition does not stop at national borders. Ethiopia is ready to take its place in the regional and continental payments ecosystem. And we are better placed to do this. As you know, AU is located in Ethiopia, in Addis, and we are representing Africa in so many ways. So on digital fronts as well, we will be leading the continent. We envision Ethiopia seamlessly connecting with regional systems, unlocking faster, cheaper, and more inclusive trade and remittance flows, at least inward for the time being. As we conclude this immensely productive conference, and I want to emphasize that EDPC 2 is not a single event, it is annual anchor of a continuous national movement. The policy dialogue, the partnerships forged, and the technical working groups established here will continue their crucial work throughout the year. The resolutions and the commitments made as the EDPC 2 are our marching orders until we reconvene. No more orders are expected. And speaking of reconvening, let me conclude with a note of great appreciation. Next year, God willing, we will meet again for the Ethiopia Digital Payments Conference 3, EDPC 3, which we intend to be the definitive digital acceleration conference. We look forward to gathering a broader, more international set of innovators and investors, showcasing tangible measures, measurable results, and celebrating the millions more citizens brought into the digital economy. Get ready, therefore, to witness the launch of a major new product powered by our national infrastructure, the announcement of regional payment gateway connections, and the most exciting hands-on showcase Ethiopian digital innovation ever seen. Mark your calendar. The future of Ethiopia's digital economy is bright, inclusive, and changing forward. Let this conference be a turning point where ideas are shared boldly, where partnerships are forged, and where our collective ambition becomes our collective achievement. I thank you.
በጣም እናመሰግናለን። Thank you so much, Your Excellency Solomon Desta, Vice Governor of Financial Stability at the National Bank of Ethiopia. And thank you for the reaffirmation that the way we're going as a nation is the right way. And also, I look forward to next year already to celebrate more milestones and launching more products in the coming year. As His Excellency said, now take out your phone and mark your calendar, block it already. Yeah, well, you'll see me next year, so I'm already doing it on my phone right now. Okay, so next we'll have another remark to be delivered by Mr. Yilabes Addis, CEO of ITSwitch, and ITSwitch is one of the major players, and okay, sorry, I think this is the perk of ACs. Okay. All right, so please help me in welcoming Mr. Yilabes Addis, CEO of ITSwitch, to deliver his remarks.
Good morning. Your Excellency, Solomon Desta, Deputy Governor of NB and Board Chairperson of ITSwitch, Your Excellency, CEOs of financial institutions, Your Excellencies, distinguished leaders, colleagues, partners, good morning again. It's a profound honor to welcome you to the second day of Ethiopian Digital Payment Conference, an event that brings together the visionaries, innovators, and system builders who are shaping the future of our nation's digital economy. Today, we do not merely look back on progress. We celebrate a defining milestone in Ethiopia's financial modernization journey. The recently released Africa NENDA's State of Inclusive Instant Payment or Systems or SIPS 2025 report elevated ETHSwitch's inclusivity ranking from basic to progressed. Even more remarkably, Ethiopia is featured as continental case study, standing alongside nations such as Nigeria, Ghana, and Egypt, recognized as a model for fast, coordinated digital transformation. Yesterday's launch of Ethiopia, our so-called instant payment system, marks a historic achievement. It is outcome of a year's collaboration, technical rigor, policy alignment, and unwavering commitment across our entire financial sector. At ETHSwitch, our mandate has always been clear: to serve as a backbone of Ethiopia's digital payment ecosystem. But that mandate finds real meaning only when every financial institution, large or small, and every citizen can access a payment system that is instant, secure, interoperable, affordable, and trusted system. The journey here has demanded resilience. Integrating diverse core banking systems, wallets, and other digital innovative technologies, ensuring 24/7 uptime, meeting global cybersecurity standards, and preparing the national infrastructure for real-time operations have required significant investment and a sector-wide determination. We know readiness varies from financial institution to financial institution. Some institutions are already frontier for digital innovation. Others are modernizing their complex legacy environment. To bridge this diversity, the new IPS is built on the ISO 20022 global standard, supported by a robust middleware capable of translating legacy formats into modern, interoperable messages. As highlighted in SIP's report, this design ensures that every institution, regardless of their technological maturity, can integrate, scale, and innovate at the same pace as the ecosystem does. But today's financial landscape demands more than technology. It demands trust, collaboration, and shared accountability. It requires us to strengthen our defensive posture at a time when Ethiopia ranks among the world's top targets for cyber threats. It requires deeper resilience, redundancy, and vigilance as real-time payments introduce real-time risks. At the national switch, ETHSwitch remains committed to standing at the front line, fortifying our infrastructure and equipping the sector with the tools that needed to combat emerging financial crimes. Our ambitions extend beyond interoperability within Ethiopia. We are laying the foundation for cross-border instant payments and cross-border integrations, positioning Ethiopia to integrate more strongly with regional markets and global corridors. This vision is not abstract. It's already taking a shape. Our strategic investments in infrastructure and upgrades that were taking place, fraud management systems that we implemented, digital identity integration with FIDA, and the central billing platform will enable to foster the expansion into new domestic and international use cases. But even as we build platforms and networks, our work must ultimately focus on people, on merchants learning to accept digital payments with confidence, on consumers trusting the system enough to use every day, on ensuring that a cost of participating in the digital economy remains low, fair, and accessible to all, urban or rural, formal or informal. This conference, through its panels and showcase, serves as a platform for honest dialogue, a space to reflect, challenge, and collaborate, a space to turn obstacles, interoperability, gaps, regulatory alignment, talent shortage, and infrastructure readiness into opportunities for shared progress. The future of Ethiopia's digital payments is bright because of the partnerships that we nurture. The Ethiopia, our IPS, we unveiled yesterday, is not achievement of one institution. It is a national accomplishment, a collective victory powered by a dedication of government, banks, MFIs, payment instrument issuers, and payment system operators, and other partner institutions. Africa's instant payment ecosystem approaching into $2 trillion in annual transaction value. Ethiopia is no longer spectator to this continental movement. Through ITSwitch and through each of you, we are emerging as central and credible player in Africa's instant payment system. Before I conclude, allow me to express my heartfelt appreciation to all who contributed a lot in this journey. All our staff, the board, all financial institutions, partners, our system providers, consultants, and development partners. Your unwavering support has accelerated Ethiopia's digital transformation and strengthened the infrastructure we celebrate today. Thank you for working us through every step in our journey. As we begin this second day, let us move forward with determination, optimism, and shared sense of national purpose. The work ahead is significant, but so there is an opportunity. Together, we can build a digital economy that is inclusive, resilient, innovative, and truly transformative. Thank you again. I wish you a productive and inspiring day. Thanks a lot.
Thank you so much also for your strong leadership, Mr. Yinabab, and for being a strong partner in this endeavor. Okay, my office is back. I call my voice my office. And actually, let me tell you something. About 2 years ago, because of an allergy, my voice was closed, like literally closed, and I was texting people because I didn't have voice. And when they were telling me what happened, and I told them, "Suq tezagቷል," my shop is closed until further notice. But now it's open, so we're back. Okay, the first panel discussion of the day is leveraging national interoperable infrastructure for an inclusive ecosystem. So as we've done yesterday, we'll start panel discussions with a presentation, and then the moderator will come and invite the panelists. So I will first invite the presenter, and in this case, it's Ebenezer Wendosen. He is the Chief Portfolio Officer at ITSwitch. He will make the presentation, and then we'll proceed with the panel discussion. Ebenezer.
Yeah, I already have my. But good morning, everyone. I will need the pointers. Yeah. Your Excellency, Ato Solomon Desta, Vice Governor of the National Bank of Ethiopia and Board Chairperson of ITSwitch, distinguished leaders from the national ecosystem, payment ecosystem, welcome. And I really want to say congratulations for everyone for launching the National Digital Payment Strategy, as well as for launching Ethiopia, and welcome to the Ethiopian Digital Payment Conference. We're having issues with technology. Thank you. All right, so I'm just going to take you through about what's instant payment system and its related use cases in Ethiopia, what's really that we are doing, and the deployment that we're implementing for the last 1 year since we started this journey. So I think, as I see the audience, everybody knows about ITSwitch, so I'm not going to take long. Who is ITSwitch? What we do? Who are our partners? And as well as who are our owners, at the same time our clients. We are basically owned by National Bank of Ethiopia and all financial institutions, and we work with Discover international networks like Visa, MasterCard, and as well as Bank Serve Africa for cross-border integrations. And as well as we have development partners, like Ilebes also was saying yesterday, even today, we work with Bill and Melinda Gates Foundation, Africa Development Bank, and as well as Africa Ninda for our developmental initiatives. We focused on interoperability to connect all financial institutions for an interoperable environment. We instituted the first card payment network back in 2016, which we called it Ethiopia as well. It's a domestic card scheme. We have a national payment gateway to connect the entire network of Ethiopia with the world. We provide a national payment gateway. We also provide a clearing and settlement service. And we have a number of shared and shared infrastructures, platforms, services to provide for the financial ecosystem. So we build actually, we believe that we will deliver a secure, a very interoperable, and as well as real-time connectivity with all financial institutions. We believe that we are the best payment network in Africa because we focus on providing a simple, a very secure and affordable at the same time, and efficient digital payment infrastructures in the Ethiopian payment system. Basically, we focus for the attainment of the financial inclusion in the country, and our underlying mandate is to contribute to the modernizations of the entire payment ecosystem in Ethiopia. And these are basically our key milestones. We started our journey ever since 2008. Then we have become a company by 2011. Then we launched our first product and services by 2016. And we've continually followed introducing a number of products and services that will strengthen the interoperable ecosystem in Ethiopia. So the first person-to-person use case was introduced back in 2021 with which actually we used a web gate to introduce a person-to-person, because we understood after we launched ATM and the card products, we understood that the market is now getting ready for account and wallet transactions. So we come up with a WebGate solution, an interim solution that will help the ecosystem to enable account to account, account to wallet, wallet to account transactions in the country. Then we realized that we have to upgrade the solution by instituting instant payment system and as well as different grant projects. So that's where we kicked off the grant projects by 2022 with instant payment system, introduction of national payment gateway, and the introduction of shared channels. So back in 2024, we finalized the project and the implementation, the technical implementation. Then we launched IPS for financial institutions onboarding by 2024. Then we also platform has been started. And on the strategic pillar, actually, it was actually the pillar one of that strategy was to develop a reliable, inclusive, and interoperable infrastructure, which we yesterday launched on real terms, transacting currently more than close to 500,000 transactions in a day in as we speak. So it's a great achievement. Ethiopia is now live with multiple use cases. And so why do you need instant payment to begin with? Actually, is cash is the most fundamental instant payment that we have because it instantly settles. If I give you $100, I'm sure everybody will accept it. It's widely acceptable everywhere. Cash is king, and it's universally interoperable, and at the same time, it's universally available. So these three reasons together make cash the most payment form of making payments. But there's always wrong with cash. It's not remote friendly. I cannot send you money while I'm just sleeping on my sofa. But I can make payments with instant payment. And cash is very much expensive to handle. And as well as I can't keep record of cash. Whether I pay you or not, there's no record at all after making the payments. So these are actually the major reasons that we need instant payments. And instant payment has to feel like cash. It has to be available every time. It has to be irrevocable. Unless you agree with me to return the money, you have full authority not to. So we build instant payment system having these major principles. It has to be fast. It has to settle instantly for the merchants as well as for all financial institutions. And it has to be irrevocable. We cannot reverse it once the transaction happens. It's irrevocable, and without first obtaining the consent of the receiver, we cannot get our money back. So considering this, it's basically we have a cash feeling of using instant payments. And we have added a value-added services like alias services. I can send money using my phone number. I can send money using my FIDA ID. I can send any free text for the convenience of our customers. We added request to pay. We added bulk payments. We added QR payments, which we call it ETQR. Yesterday, after the launch, we have seen a very remarkable increase on our QR transactions, and it's growing day by day. The volume is coming up. And we have a mandate-based payments as well as this instant payments has actually gave us the leverage to add multiple data that can pass in one transaction. So the CIPS report in Africa has actually showed us that currently there is 33 domestic schemes in the country, which is instant payment systems in around 25 countries on Africa. From those countries, 16 countries are seeing cross-domain IPS. By that means, cross-domain, they can transact between banks and microfinances, between banks and wallet providers, as well as between banks and any financial institutions. And there are 6 countries with bank-led IPS in Africa, and there are 10 countries with mobile money IPS in Africa. And from these countries, Ethiopia is one of the 10 countries that has actually progressed to maturity level. And based on the African Ninda ranking that will be published year by year, there are different ranking categories, and Ethiopia is actually the progressing one that next year we're looking at to be at the maturity stage. Once we connected a cross-border, we will reach there, definitely. So this year since we have enabled person-to-person, person-to-business, business-to-business, and person-to-government use cases, and we are scaling up rapidly. We have actually ranked as one of the progressing countries in terms of payment maturity out of 10 countries that has seen in Africa. This is a very good testimony that we have reached in the digital, a very good stage in Africa in the digital space. And upon the implementations of instant payment, actually, we have seen best practices around the world. One of the countries that we have actually seen was India, UPI, and we have learned a lot from India. The way they structured, they formed all the use cases is one of the best practices, as you also heard yesterday. And the other one is Brazil PIX, especially their QR implementation, the unified QR implementation rollout they have done. Was one of the best practices that we have seen in also UAE. It was another country that we have actually benchmarked, and we have also seen Rust from Pakistan as one of the best practices that we have seen in the world. So there are basic principles that actually we have followed and applied when we introduce our instant payment system. The first one is it has to be fast. We have to transfer payments, and that payment has to be immediately available for the pay and as well as for the pay financial service providers. And at the same time, it has to be interoperable. It has to allow all cross-domain financial institutions to be connected with no restrictions and allow payments to and from any channel and payment instruments. At the same time, it has to be simple. Financial institutions can easily customize their channel and come up with the use cases as they need. So this is one of the principles that we have applied, and the other one is it has to be secure. We have applied actually AI-based fraud management system and as well as rule-based fraud management system to ensure the security of the transactions, and at the same time it has to have a low cost and has to be affordable for the customers and the end users, and it has to be accessible. We have introduced a unified API platform, including with a developer portal for the banking ecosystem developers to easily integrate with, and we have come up with a sandbox environment also, and we have given all the APIs of all the use cases for the financial institutions, and it has to continuously be innovative so that new products can be introduced from time to time. So these are the basic principles that we have applied. So we have already finalized and come up with a domestic P2P, person-to-person. We are now capturing close to more than 500,000 transactions in a day, close to 700,000 transactions in a day currently from all financial institutions, because all financial institutions are now onboarded on IPS. We recently launched also person-to-business using request-to-pay and bulk payments that can serve online and merchant over-the-counter services. We also enable person-to-government and government-to-person use cases for use cases like salary payment, bill payments, and direct benefit transfers, like social beneficiary payments that we can really introduce with the banks. The other one is B2B, we have already started with, and cross-border discussions are currently ongoing with several corridors. Once we laid the necessary the necessary scheme rules and the harmonizations of those scheme rules with the corridors and the facilitations of regulatory discussions, we will finalize payment as well, hopefully this year. We built looks like this. We enabled non-banked, financially excluded ones, relying on mobile money, can transact directly with a banked user, and as well as both banked and non-banked wallet service users can actually make payments at the merchant side, whether you're scanning a QR code or receiving a payment request from a merchant. And they can also go online and make payments using card payment, using account, using a wallet payments, and all these transactions will settle instantly using a wallet payments, and all these transactions will settle instantly and at the same time, the merchants will receive the payments right away. So we have enabled all these use cases, bulk payments, QR payments, request to pay, and Monday. We believe that it's a behavior shifting use case since the merchants will have the leverage, the authority to actually collect their payments or their, for example, utility bill payments can be sent out to 1 million customers at once. And Ethiopian Electric Utility, for example, can collect his fees automatically from his customers using request to pay rail. So this is the ecosystem that we have built looks like this. We have actually upgraded our infrastructure as well in terms of securing high availability 99.9%. And Matt is looking at me for a time. So thank you very much.
Thank you very much. That was a great presentation. I know there is a lot we can talk about it, and the panel discussion will also continue. So we'll get to learn a lot about that. Okay, where is this? Right, so the next one is going to be the continuing panel discussion. Can you put it on the screen? My phone got stuck. This technology. Okay, so in the meantime, I'll invite the panel moderator, Tochukwu Igesi. I hope I said it right. He is the head of payment and digital financial services at Genius Analytics. He will be moderating this next session, leveraging national interoperable infrastructure for an inclusive ecosystem. So, Igesi, let's welcome him warmly.
Good morning, everyone. We have a question coming up on the screen shortly. Great. So we're going to do this together. We've had a great presentation from Ebenezer, and also we've had colleagues from the Central Bank and ITSwitch present or give us opening remarks, so all protocols duly observed. So just to start the day, perhaps if you could use your phone and scan the QR and just tell us how you're feeling this morning. This is a warm-up because we will do more of this as we go ahead. Yeah. I hope you're not tired. Okay. Great. I see some people saying happy, proud of ITSwitch, awake, enlightened, energetic, more like it. Excited is coming up a lot. Okay. Patriotic. Okay, nice. ITSwitch is excellent. Mr. Yilbis, I think you're doing a good job. Fresh. Great. Feeling hopeful. That's a very good way to start the day. So as your feeling comes in, we will just go into the session. So once again, good morning. We are now welcome to the panel that is focused on leveraging national interoperable infrastructure for an inclusive ecosystem. We just heard an insightful presentation from Ebenezer on the deployment of the IPS use cases right here in Ethiopia. Now we are going to widen the view. The objective of this session is to dig into how leveraging national infrastructure for an inclusive ecosystem. We aren't just talking about technology, we are exploring the regulatory frameworks, the scheme designs, and the operational execution to make these systems work for everyone. To help us unpack these complexities, I'm joined by a lineup of experts representing diverse markets and stages of IPS maturity. To start, we have Ngova. I didn't want to mess with the name, so Ngova Wankwo. She's the Executive Director of Business Development at NIPS, Nigeria. A round of applause. Thank you. She's representing a market that has scaled IPS earlier than many of us in this room. And they are the only IPS on the continent with the maturity ranking. Up next, we have Abdullahi Bihi, CEO of Somali Payment Switch, who brings insight on building infrastructure on their unique market realities. Great, thank you. Next, we have Soban Najan, Head of Advisory at Paces Labs, joining us to offer a global perspective. And last but not the least, Ebenezer, the Chief Portfolio Officer at ETHSwitch, representing the host market as Ethiopia sequences its own IPS rollout. Thank you very much, distinguished colleagues, for joining. So we have a lot of ground to cover, from early foundational decisions to cross-border visions. So let's dive straight into it. Great. So we have another question, the next one. Before we start with the panelists, we would appreciate if I don't know if you can see the options. But the question there is, what one foundational decision drives long-term instant payment system success? And the first one is strong regulatory, I can see from here. Mandate, great. So you can see it, got you. All right. So let's see your opinion, and then we will go from there. Whilst that comes in, so just as the topic of this session, compelling use cases seems to be topping the chart. Okay. So industry-wide alignment is now leading. And I think that's something in Ngova and NIPS they are doing very well, as well as Ebenezer and ETHSwitch. So we will talk about that shortly. So going right into it, thank you for your contribution. Ngova, I'll start with you. Nigeria has scaled IPS earlier than many African markets. Looking back, what were the single most catalytic decisions that unlocked nationwide adoption?
Thanks, Tochukwu, and thank you very much to ETHSwitch for having us here to discuss the Nigeria story. So I think it's pretty clear from the poll what the sort of strategic pillars were. I think the first one for us was interoperability. So that was non-negotiable. It was ensuring that everyone plugged into the same system, same set of rules. Nobody felt that they were given more of an advantage than others. And of course, similar to ETHSwitch, our ownership helped as well. So the Nigeria Interbank Settlement System is the national switch. It's owned by the banks and the Central Bank of Nigeria. So that already set a very clear sort of direction as to how we were going to go. The second thing for us was ensuring the priority. So the understanding that the systems will work when you want them to work and how you want them to work. And since instant payments was launched in Nigeria, we've invested very heavily in our technology. The third, and the last that I'll speak on, so I don't take too much time, was on pricing. So we've been very deliberate with the way that we price instant payments. From the get-go, it was important to us that given that we are a commercial entity, so despite the ownership I've just spoken to, we are a commercial entity. But the understanding was that we will be profitable to the extent that we need to reinvest in our business. So not profitable to the extent that it's punitive to the ecosystem or it sort of price gouges, but just enough that we remain efficient and that the market value is created for shareholders. And so what that has meant is, over the last 13 years, we've brought our pricing down by 98%. So we started off at 100 naira, which for us at the time was reflective of the cost and the market. But as we saw adoption grow and we saw better engagement and interoperability, we've brought pricing down from that 100 naira to currently 3 naira 75 kobo. And for us, the thinking behind it is if you really want to drive scale and you want to drive adoption, then we need to bring all partners to the table.
Just still on that point of pricing, a few weeks ago, a few months ago, NIPS, Nigeria Interbank Settlement System, announced that it plans to eliminate the NIP, which is the IPS, the NIP transfer fees by 2026, and you will transition to a subscription-based model. What does this mean, and how are you going to actually get that money to reinvest into your system if the platform will be free completely?
So I was hoping you weren't going to say that. But the reality for us is that given that IPS in our market is mature, the question is what next? And what NIPS does is, in addition to IPS, we also offer a range of other services. So we've got direct debits, we have identity validation, we provide data services, we have collections products. And so the thinking for us is, can we bundle all these products together and provide a subscription-based pricing to the 1,000 plus entities that we have that connect into NIPS today? And the way that this will work for us, or rather the thinking for us, is that it eliminates the mental arithmetic around trying to determine, if I push this volume through NIPS, what's my cost going to be? We can upfront that conversation, show you what your pricing will look like for the year, and encourage you then to just focus on you as sort of hard as you can. And that again gives us some stability in understanding where we're going to end the year from a profitability perspective. Allows us then to build our budgets appropriately, to cost appropriately, drive efficiency, but more importantly, push the agenda for the country.
Great. You would be one of the first IPS operators to use that model, so perhaps next year we would hear how that is going. Thank you very much. We'll move to Abdullahi from the Somali Payment Switch. You have just launched your IPS in, I believe, March 2025, right? This year?
January.
Correct?
January 2025.
January 2025. Okay, great. And you started with QR from start. Yes. Correct. So you have built your IPS on the unique market realities. What were the first principles you anchored when designing the national switch, noting that you started with QR?
Thank you very much. I think it would be best if I started with, we started the effort to start this switch in 2018, but things didn't work out. And there were a lot of lessons to be learned from that. And I am reminded of this because I see this poll here, market alignment. We tried to start with cards and ATM interconnectivity and interoperability, which did not work because the market was not ready for it. So these 16 points here, they mean a lot, they carry a lot of weight. So we started with instant payments in 2024. earlier than that a little bit. We struggled for some time. We launched, actually our first live transaction went through the system at 2 a.m. on the 13th of January 2025. I remember the date and the time because I know how stressful it was to launch. It's a lot of pressure from the board and from the stakeholders, and we've been pushing the launch for quite some time. And we had a nice launch event on 25. We celebrated, and going live doesn't mean going live. System ready, you can have the technology ready, but if people are not using it, fast forward 11 to 12 months, we are live, team banks, and from scratch. You can implement QR payment support within the system, but there are always challenges on the participant side. So as we speak, only around 40% of them have implemented the QR. That's one of the reasons that P2P is a little bit ahead of P2M because of this. We're adopted as part of the design were to do with the governance. If you have a very strong governance framework in place, sure, the rest is technology and people which can be managed through those requirements that are codified in the rule book as the foundation of everything we do. It guides our decisions in operations, in restricted as. It is not clearly specified in the rule book. So in a sense, it's a limiting factor, but it's always good to have a grounded root so that you can make sure that when we launched, we required some of the banks to deposit some money, as part of the settlement arrangements. But some of them said no. Because nobody's using the system now. There's no need to restrict money. We need this money to work for us. So when you are ready, tell us and we can deposit the money. But then we have is version 1.0, and we developed that one when we didn't know anything. It was hypotheticals. In January, a long list of changes and some challenges that we have faced. So to summarize my answer, good governance was the core design principle that we have adopted.
Thank you very much. And we also would note from your answer that your settlement sits within the switch, not the central bank.
The central bank is our settlement agent.
It's a settlement agent.
Yeah, but we send them the NSI file and then they we send them the NSI file and then they move the money for us.
Okay, got it. Yeah. Thank you. So from your presentation, you are sequencing multiple IPS use cases at once, the P2B and other use cases, as well as all the features that you've launched recently, like the request to pay, that I have witnessed myself in a store. So what informed this rollout strategy and why now?
Thank you, Tosh. So it was actually intentional from the beginning because first you have to lay down the foundations, which is P2P. And back in a few years, the Ethiopian financial ecosystem was fragmented. There was inconsistencies in user experience, as well as we could not find in the market that what the customer needs and what the market is delivering. So we come up with which one is the high public good impact that can deliver a very huge impact in one go, that can translate the cash-based economy into a digital economy. So in order to do that, you have to lay down P2P first, a person-to-person transfer, which is the foundation layer. If I can send money to Soban easily tomorrow morning, it will be easy to translate me into digital from cash. So this high public good impact use cases we selected was person-to-person, QR, request to pay, then alias. These are the major ones. And from these ones, impact the daily uses in the market that everyone uses. I can go out and shop at the merchant location, and I can pay using a QR, and I can use request to pay, and it's easier to actually bring the adoption in terms of digital. So why now? Currently, the timing is right, because we believe our financial institutions are digitally growing, and the government is actually very hard. We have the digital government is actually focused in terms of bringing digital highly into the market, and all this actually will help us to achieve our target in the future. So all those use cases that we saw, the P2P, the QR request to pay, it's actually a deliberate that we believe it will help us to leapfrog into the market, and as well as close the interoperability gap that we have witnessed in Ethiopia back in few years, and re-strategize Ethiopia for cross-border payments. And by the time that the corridors open, it will be easier for us to connect with all African countries as well as in the world.
Thank you very much. Moving on to Soban. We've heard from other panelists from specific markets. Just opening up the view from your experience globally, what is driving success for these deployments?
See, having listened to all the three esteemed panelists, I think the one aspect I would focus on more, and I'll give you a completely unique example. If I share the example of Pakistan, the use case that they started with was bulk payments, G2P, right? They could do that because there was already a very well-functional, expanded payment network called OneLink already in place doing P2P payments. So that was not the need of the hour. And G2P had an implied interest for the government because they run a very large social welfare program called BISP, the Benazir Income Support Program. So this started with G2P. That had its challenges, of course. What Ebenezer just pointed out, that when they started planning in Ethiopia, the very reason that they picked P2P was the reason that Pakistan did not pick P2P. So the perspectives always vary and situations vary. And because they picked G2P, a use case which banks were not doing in an interoperable manner. Bulk payments were still happening, but they were happening in closed loops. Right? So for example, I remember starting from 2008 and 9, if you had to do social welfare payments, every year the BISP program would run RFPs, and that RFP was for essentially one on the supply side, will give you all the government liquidity, and on the demand side, you have to open a lot of wallets or you have to issue a lot of cards, and then people will get those cards and then they have to go to your ATMs and be able to redeem those. So obviously that had its own challenges. So that was the use case they picked. So I think what I would say is that use cases, of course, inform what is the need of the specific economy or the geography or the jurisdiction. But then the key question is, how do you evolve? So from G2P, for example, the next thing that they evolved to was P2P. Now the rationale for P2P was low cost, because again, a P2P was already in place. So what they did was that they, on day one, a decision which was quite unpopular with the stakeholders in the ecosystem, especially the banks, was that they ran P2P payments completely for free. Now, obviously, that has a challenge because if you're a financial institution, you have invested in infrastructure, your mobile banking, your channels, your platforms, they have a cost. And to say that you are forced to offer, let's say,
that we had to build, and that remained true. Pricing, as I said earlier, was also a big thing. So if you sort of listen to what I said about how we've dropped pricing over the years, if you compare it to other forms of payment, it's probably one of the cheapest that there is. And the last thing, similar to the gentleman from Pakistan, was also government adoption. So when the government itself is using the instant payment rails for salaries, for vendor payments, for vendor payments, for distributing subsidies and incentives. That itself drives the behavior. And of course, part of the government as well is the Central Bank of Nigeria, which through its sort of mandate to NIBS and its mandate to the ecosystem, played a very central role in ensuring that from a consumer protection perspective, consumers were protected, so trust was increased. From the way that we all interacted with each other, they were there as well to enforce discipline and ensure that people were doing the right things. And then I think finally, as well from a central bank perspective, is there was a vision similar to what was launched yesterday for Ethiopia, which clearly sort of detailed where the country was going to go, and that gave consumers even more confidence and trust.
Thank you very much. In your previous response, you had mentioned that you have 1,000 participants. That's 1,000 financial institutions.
Yes.
Can you double click on that? Does that who does it include?
Okay, so the way that the business is segmented is we've got the deposit money banks, so that would be the commercial banks, the merchant banks. There are about 30, 35 of them. And then we've got the OFIs, and the OFIs sort of range from the microfinance banks to the mobile money operators, to the, who else is in that category? So the OFIs essentially has that segment. And then we've got our partnerships, which is the fintechs. So we've got the payment service providers, as well as the payment terminal, so the guys who run the terminals. So we have that segment. And then we have an interesting segment, which is we call our emerging market segment. So we support a lot of initiatives from the stock exchange, from insurance companies. So when we look at all of them, and we provide various services. So some is straight instant payments. Others would be things like direct debits, things like request to pay. So there's a whole range of use cases across those 1,000+ entities. And of course, we have government as well. So in addition to the federal government, we've got state governments, we've got local governments. We've also got several government agencies that will do a number of things. So there's some who maybe are focused on intervention, so would use our rails for bulk payments. There are those that will use our rails for the collection of taxes and levies and things like that.
This includes MFIs, microfinance banks.
So they sit under the OFI segment, yes. And there's quite a number of, so we've got at the moment around 550 active MFIs across the country.
Most of them are members?
Most of them are connected to us, yes.
Okay, so this is a message to everyone still considering allowing MFIs to play in the ecosystem. Yeah, and the interesting point here, I believe that one of the MFIs in Nigeria is probably driving huge volumes for you.
So we've got a few MFIs that are driving huge volumes. And really it's on the back again of institutions understanding where the gaps are, plugging into that, having amazing user experience from their apps, and have really made users trust and want to use the systems. And we've seen humongous growth in 5 years in that segment alone.
Awesome, thank you. Moving on to Ebenezer, you just mentioned that you do 500 transactions per day. So where do you see the quickest adoption opportunities?
500,000 transactions, more than, close to 700,000.
Oh, close to 700,000, okay.
Yes. So 500 is, I think, per minute.
Okay.
Yeah, thank you, Tosh. Actually, if you want optimizing for rapid scale, the fastest wins are always threefold. Like we focus on QR payments for a country like Ethiopia, because Ethiopia is basically a cash-heavy economy, and in order to translate that economy into digital, you need a fast payment, like instant payment system, that can deliver the payment to the merchant instantly, as well as a very low cost and inclusive interoperable payment layer, which is QR, basically. So in terms of achieving that, if you really put and make available of ETQR everywhere, we can easily democratize the merchant acceptance. And the other one is request to pay that we will look into. Request to pay, we can enable every use case or every payment into digital using request to pay, whether it is bill payments, utility bill payments, whether it is government tax bill payments, whether it is school fees. You can basically put everything in request to pay rails. So we are actually seeing a very good traction and attention from financial institutions as well for request to pay, because we can easily digitize each and every non-taxable collections of governments as well. And we believe request to pay tackles all the frictions for both the payers and the pay at the same time. So it's a very good and a fundamental use case that we are currently rolling out. And the other one is alias-based payments, where actually users will be relieved from the pain point of memorizing account numbers. They can easily use phone numbers to transact. They can easily use FIDA numbers. They can easily use free texts. I can set up my account number like abeni@andulesost or abeni@etswitch.com. Or I can use my email as an account number to send or to receive payment as well as transfers. So these are the basic fundamental use cases that we look at, but bulk payment also will follow slowly. Bulk payments, we can enable salary disbursements, we can enable government payments, we can enable dividend payments through bulk payments, interoperable ones. We can really also enable interoperable PSNP payments using bulk payments. So these are the major ones that we look at. We believe that can really translate a very good behavioral shift in the digital economy of Ethiopia.
Yeah, thank you very much.
If it's
Please
possible, I'd just like to add something to this. And this is something that my good friend Ebenezer and I have discussed as well. Because your question specifically is about achieving scale, we have to perhaps we take one step back and let's just iron out what are the roles being played by these different entities. NBE as the regulator, ITSwitch as an extension of NBE in this case, right? The implementing arm, is putting infrastructure in place and giving rails, creating the ecosystem that is facilitative to significantly drive up adoption, to go from the thousands of transactions to the millions of transactions. That is where the private sector comes in. That means the banks, but that also means the fintechs, that also means entities like aggregators. So one very specific example, like for example, Ebenezer said, right, schools collecting payments through request to pay. It's possible, but I think it would be very difficult to achieve real scale if schools have to work with commercial banks to do their billing. Because this now you are going in the area where every specific industry has specific requirements. So what you need is somebody sitting between a regulated financial institution and that school who is doing the software, who is doing the service, who is giving certain guarantees, who's providing a service to that school. And then they do it at scale, right? So somebody does it for an entire industry or a couple of industries. So the sooner the private sector gets engaged, embedded, operational, and really starts to work with ETSwitch and all of these entities, the sooner you'll get that scale that you're asking about.
Right. So technically, you are highlighting embedded payments.
In a way, that is an extension of it. Even the use cases that Ebenezer has just pointed out. See, ETSwitch will always provide a interface and a capability to everybody without discrimination. So their request to pay will be a request to pay that anybody can use. But when you go talk to, let's say, the Ethiopian utility, electric utility company, versus when you go talk to a school who is collecting a much smaller quantum of payments, you are solving two very different problems. So there basically has to be some entity from the private sector who is dealing with these different use cases. And they are creating a margin or a space for themselves. They are obviously, everybody has to make money in this entire value chain, otherwise it doesn't work. But that's where scale comes from. The only other way scale comes is if the government comes in and subsidizes everything. That is not sustainable. You'll do it for some time.
We have P2P, which is the dominant now, at least for now. We have P2M ready. P2G is also implemented. And also the G2P, basically bulk payments, which can be used for more than just... the reason that has to do with several reasons. The merchant acquirer side of things is not doing well. It's a problem that we have to solve. The consumers can have their wallets as a means of payment, but if the merchant cannot receive them efficiently and easily and smoothly, then there is no P2M traffic at all. Secondly, Somalia, as opposed to Ethiopia, is a cash-light economy. Myself, I don't remember the last time I've touched a Somali shilling note. I think more than 15 years ago, except for only 5 times when I attended a wedding. They usually give you very large amounts of money, shillings, large bundles. But nobody uses that money. You usually give it out. We are a dollarized economy for now. The central bank is putting some effort into addressing that issue. Even when the P2M tries to pick up, I think it will take time since it catches up with P2P because of the new tax regulations that the government has enforced now. There is a push towards domestic revenue mobilization, and the merchant accounts are now being monitored. So merchants would prefer to receive it in their own personal accounts. So that's another challenge that must be addressed at a different level than SPS, a higher level. But in summary, P2P is the leading use case now. What we also have seen is that I've been dealing with the participants and trying to give them some insights into how we can encourage the utilization of the mobile channel because that's the only one that's available now. We're thinking of USSD and other mechanisms as other channels. What we have seen is in terms of implementing the integrations, the UX is not representative of what they want. They want to gain the major market share in light of this new nice development called SIPs. That's an equalizer. Instead of thinking in terms of UX designs and improved designs and ease of use, you would see some banks enabling the customer to send a transaction after 10 or 5, at minimum 5 touch screens. And that's not efficient. That drives away customers from your bank to the next one. Thank you.
Yeah, thank you very much. We would now open the floor for questions because we are out of time. We can go to the last question. And thank you very much to the participants and also the panelists for your contributions. So if you have any questions, we can take 2 questions, or you can type it in and we would read it for you. Okay. Yeah. Anyone? Oh, please. Let's take that.
Okay, good morning. Thank you so much for the panelists and the moderator. My question is for Ebenezer. The fact that the Ethiopian government is just giving strong attention for the digital economy is good, but so far we have low digital literacy rates. So what's your insight on the literacy? How do you just improve? Because it's very low. The government...
Where your digital public infrastructure comes in is it's just a rail. A payment switch does not differentiate between a message coming from, let's say, a man versus a message coming from a woman. But if your ecosystem does not provide accounts as easily, let's say, to a woman as it does to a man, then that's where the problem needs to be solved. So it's very difficult to say how were challenges overcome. They were overcome with determination. That would be the most simple answer to it. But then these are very technical questions. So you identify the problem, you identify how can technology help solve that problem. A lot of problems are solved if you have a good digital identity infrastructure in place, and that's something that Ethiopia is well on its way to achieve. That linked with your payment system solves a lot of problems. So I would say identify the 2 or 3 root causes and then identify how the digital infrastructure helps solve those. The answers to most questions already exist. It's really an implementation question. Commitment to that implementation and determination.
Thank you. Yeah, please go ahead.
Thank you for the question. I think we have to actually tackle financial inclusion first, because financial inclusion by itself we will be successful when we achieve access, which basically ITSwitch is doing with interoperability. We are widening up access so that all financial institutions can talk to each other. Then the second one is coming up with a useful product, a useful product that anyone can use digitally. And like you said, the third one is to actually scale in financial inclusion is financial education. Recently, Ethiopia has actually, I believe, we are being technologically ready. People are actually moving to using digital payments, moving to cash-light economy after all. But we have to really work on the financial education, as you said. We have to work on integrating into our school systems, integrating into our curriculums, and especially to actually tackle the fraud, the social engineering frauds that we are recently seeing. And I believe it's everyone's assignment in the financial ecosystem that we have to educate our customers day by day using different channels, medias, and as well as day-to-day communications. But most importantly, as we go along and work on financial inclusivity, we can actually expand the awareness and the knowledge in the ecosystem.
Yeah, thank you very much. Once again, thank you, distinguished panel, for your contribution today. Thank you. I think we'll have the photos.
Thank you very much for that great moderation, Igosi, and the panelists. What an insightful session. And it's always best to learn from those who have started it before us and who have done great jobs, because it makes our life so much easier. So, ladies and gentlemen, that was a panel discussion, the first for today, leveraging national interoperable infrastructure for an inclusive ecosystem. Thank you so much. All right, so now we'll go to the second one. Thank you. The second panel discussion is on connecting Ethiopia, cross-border payments for growth and inclusion. And first, we'll start with a presentation, and that presentation will be delivered by Antonio Perella. He's head of section at CPM in Banca d'Italia. Come stai? All right. Grazie.
Good morning, everyone. First of all, thank you to the organizers. It has been a great conference so far. Very looking forward for the rest of this conference today, and thank you specifically to the National Bank of Ethiopia for the kind invitation. It's a great pleasure for me to come here in Addis and speak about cross-border payments. As said, I'm Antonio Perella. I'm leading the office at the Bank of Italy, who is in charge of supporting our governor, Fabio Panetta, as chair of the BIS Committee on Payments and Market Infrastructure. That is a BIS standard setting body for payments. So the bank is pretty much involved because of that on cross-border payments, which under our governor's lead is continuing to be a priority for the committee. So today I will give you a brief overview of the G20 roadmap to enhance cross-border payments, and I hope it will set the stage for the panel discussion that will follow. But before jumping into the roadmap, let me recall why cross-border payments are important. For many businesses, individuals and governments, sending or receiving payments across borders, across currencies, is a vital activity. Think about a company that has to source goods from an overseas suppliers or has to send its own product to a foreign customer. This company needs efficient cross-border payments because it doesn't want to pay high fees on these payment transactions, and also doesn't want this money to be locked in for too long because liquidity is expensive. So cross-border payments are essential to foster trade and economic integration. And similarly, many people rely on the ability to send and receive money abroad. Think about immigrants that work abroad and want to send money to their families home. So remittances as well have to be efficient, because otherwise, if they're expensive, that would be an additional tax on the salary of these workers. So all in all, this is a very relevant market. It has been estimated to be around 200 USD trillion in 2024, and this is nearly twice as much the size of global GDP. And by the end of this decade, this number is projected to grow. There are some estimates that tell us that it may grow up to 300 trillions. So cross-border payments have grown for many reasons: regional integration, globalization, liberalization of trade, finance, and overall greater movement of people also for travel and leisure around the world. But still, they are very much underperforming domestic ones. They suffer from 4 challenges. They are more expensive, slower, less transparent, and for some corridors, it's even difficult to access the service. So back in 2020, the G20 Saudi presidency made cross-border payments a priority. And since then, all the other G20 presidencies kept it high on the agenda. So some partner institutions joined forces and under the coordination of the Financial Stability Board, they are working together to enhance cross-border payments, to make them faster, cheaper, more transparent, and more accessible, and this is called the roadmap. So there are several institutions that work together with the FSB. One is the Committee on Payments and Market Infrastructure, the CPMI, but also the World Bank, the IMF, the FATF. In 2021, the FSB set some quantitative targets to measure progress and the performance of cross-border payments globally. And there are specific targets for each of these 4 challenges that I mentioned before, and for 3 specific market segments that are in the scope of the roadmap. And these are wholesale payments, retail payments, and remittances. After an initial analytical phase that lasted roughly 2 years, in 2023, the roadmap has identified 3 overarching themes, 3 priority areas that you can see in the slide. The first one is enhancing payment system interoperability and extension. And these include work on expanding access, extending operating hours, and promoting interlinking of fast payment system. The second one relates to legal, regulatory, and supervisory framework. It includes work to improve consistencies of this framework for banks and non-banks payment service provider, enhancing information for end users, so transparency, and also harmonizing the way AML and CFT controls are applied across jurisdictions. And the third one relates to messaging standards and data exchange, and it includes work to harmonize data frameworks that are those rules that govern how data for cross-border payments is collected, stored, and managed. So now we are 5 years into the project, and several of the work priorities of the actions have been completed, and the others that remain are on track. I will not go in the detail of all the work that has been published, but several analytical reports have been published, also guidance, recommendations, and framework to help jurisdictions and payment service providers to make changes to their payment systems. For instance, framework that help them to make decisions around interlinking arrangements, or how to expand operating hours and access. And these reports are usually mentioned, reported in an annual progress report that is published usually in October and is submitted to the G20 for accountability. One important activity under the roadmap is monitoring progress, and we do it in two ways. On the one hand, we monitor the input. That means we monitor how jurisdictions are implementing the guidance and the recommendation that has been published. These are, in a way, the ingredients of the recipe. If you don't implement these recommendations, it will be difficult to have enhanced cross-border payments. From our latest surveys, we can draw that the share of payment systems planning to extend operating hours has slightly increased, and among the extension plans, there is growing interest for 24/7 operations. There is, of course, a growing adoption of the ISO 20022 standard, and also links between fast payment systems are growing. There is growing interest for them. On the output, that is instead monitoring how cross-border payments effectively are, how far they are from the targets that the FSB has set. The FSB developed key performance indicators, or KPIs. And since 2023, it's publishing an annual report of how these KPIs are evolving. So from taking some data from the latest report that has been just published in October 2025, we can see only slight improvement compared to the initial measurement in 2023. Overall, the global speed of wholesale payment has improved, and this potentially may facilitate and improve the speed for remittances and retail payments. But still, on those two segments, we are a little bit far from achieving the targets. One key fact from our latest analysis is that there is a strong heterogeneity across regions. And you can see it in the slide, on the graph, on both graphs actually. The top one, there it's represented the speed for wholesale payments. You can see that there are two regions, Europe and North America, that are close to meeting the speed targets, while there is a significant gap with other regional areas. And in particular, Africa is the least performing region, with only 25% of cross-border payments processed with 1 hour. And similarly for costs in retail payments, this is the other graph below, there is a greater heterogeneity, both by use cases, where we find that person-to-person payments are the most expensive ones, and also by geographical area, where the region where sub-Saharan Africa is the region with the highest fees across all use cases. So this is the region where actually an enhanced cross-border payments would make the most benefits, because it will unlock capital and support the economic growth. Let me quickly conclude with some next steps. So the work of the roadmap is, in principle, it has to be completed by 2027 because the majority of the targets I've mentioned before have to be achieved by that date. But according to the progress we have assessed so far, it will likely that we will need to continue working beyond 2027. So far we have seen modest progress, but still this roadmap, this global project is removing significant barriers to better cross-border payments experience. One key point now is really for the jurisdictions, for the stakeholders, for the private sector to adopt, to implement the recommendations that have been published. And in this sense, the partner organization will promote and will support these stakeholders to implement them. As we have seen, progress towards achieving global quantitative targets is uneven and reflects different starting conditions. Greater emphasis will be placed on development and support for specific groups and regions that are farthest from reaching the targets. In this sense, it will be key to strengthen also technical assistance programs, the ones offered by the World Bank and the IMF. Another key point refers to increasing, strengthening the dialogue between public and private sector, and also between G20 central banks and non-G20 central banks. This started as a G20 project, but it involves the entire central banking community, and so also non-G20 central banks and jurisdictions. We have several groups to strengthen this dialogue, groups that where private sector representatives are involved, and also other groups where the broader central bank community is invited to discuss the issue. And we will continue to leverage on these groups. Of course, we will continue to monitor progress, both on the inputs and on the outputs. This is a key step, because you cannot make changes if you don't know where are the challenges and how to intervene. And let me conclude with the point that as Bank of Italy, we have reiterated in several fora, it is very critical at this stage to focus our resources, energies, and investments in projects that can deliver concrete changes, concrete enhancements in a short time frame. Interlinking fast payment system is one example, and as part of the Eurosystem strategy, we are investing a lot in this. But as I said before, supporting jurisdictions that want to develop, modernize their domestic payment infrastructure is also key, because at the end of the day, every cross-border payments, the first leg and the last leg of a cross-border payment is a process through a domestic payment infrastructure. So supporting and developing safe and sound domestic infrastructure is key. So technical assistance programs in this sense are really welcome, and the Bank of Italy stands ready to support and to provide assistance to the jurisdictions that would like to receive it. I think I'll stop here, and thank you for your attention.
Grazie mille, signor Perella. All right, so now let's go to the panel discussion. And for that, I will invite the moderator of this panel discussion, and that will be Francisco Salvo. He's the Senior Financial Sector Specialist at the World Bank, and this panel will be moderated by him. Welcome.
Thank you very much for the invitation to the National Bank and for the opportunity to chair this panel. I would invite all my panelists to join me on the stage now. I will start to introduce them meanwhile they reach the stage. So, as first we have Mr. Director Solomon Dante, that is the Director of Payment System of the National Bank of Ethiopia. We have Ngober Iyambe Wankwa from the Executive Director of Business Development of the NIBS from Nigeria, who was as well on the previous panel. Then we have Dagmawit Abebe, the founder of Kendem Coffee, and Antonio Perrella, head of section of the Banca d'Italia, that just had this presentation. The objective of this panel is to delve into cross-border payments and to bring you a mixed perspective. So on one side, we have a person from the private sector, an exporter. So we will understand also what are our constraints, the problems. And on the other side, we see how the market on the supply, but in this case, most on the infrastructure side, is actually supporting with several initiatives this development. So I'll start with a question that will be the same for all of you, and then this question has two elements, and then I'll sit here. Okay, it works. So the first question is, from your perspective, for each of you is kind of a dual question. What is the single biggest barrier preventing cross-border payments from becoming faster, cheaper, and more accessible? So we saw these were the barriers that Antonio presented as clearly defined by the G20. And what is one practical action in your institution or sector can take to address those barriers? So maybe I will start from Dagmawit, as she will present, let's say, what are also the hurdles that she's facing with her company.
Thank you very much. Thank you, everyone. Thank you for having me. I don't think I can be able to start with the word single, but there is a lot of complications that as a digitally driven SME in the Ethiopian value-added coffee sector, I understand how our current system limits our potential. Today, formal and online payment systems are not interoperable and highly fragmented. Documentation process remain lengthy. There is a multiplicity of authorities involved in the process that express diverse requirements, request documentation for a single cross-border sale. An SME like me must visit multiple offices, wait hours and hours, and manually coordinate approvals while still claiming to offer real-time or express delivery to customers. This is not sustainable for currently digital contracts and digital invoices are not recognized locally. And yet these are the tools that allow exporters like me to act fast, deliver on time, and complete globally. And we only have two options to export to deal with abroad importance in traditional correspondent banking, to get paid or to depend on the third-party gateways to receive Forex linked with a smaller contract. In fact, currently direct digital Forex payments into our accounts via any currently available payment gateway are not yet accessible as products in the market. So to give you an idea what I mean with that, when we use currently payment gateway aggregators to receive payments, the banks that they work with, they don't give us with the Forex. So we have to settle it with the local currency. And that's not encouraging as an exporter, because the idea of to export is to gain also the hard currency. So the banks are taking that, so that's what I mean. Thank you.
Thank you very much, Dagmawit. And maybe moving to the second part of, let's say, your question is that any practical action that you are moving on. I mean, I think the first part of the answer frame the point that the issue of international trade sees payment as one component, and document management linked with payments and the export is a huge issue, and digitizing it definitely is an aspect that the financial sector can support, working with other authorities, but as well, depending on the market, there might be as well foreign liquidity issues then I think this is also one of the aspects that should be considered the ones doing interlinking projects. Over to you. Yeah.
I think allow me to be a little bit bold and ambitious. Currently that we've seen a little bit changes in the Ethiopian digital sector, especially the MESOB digital platform. It's not something that no matter that how me and my company are digitally oriented, if the infrastructure is not there for us, there is nothing that we can be able to accomplish. So for everybody who's involved with that, which I believe that at the new MESOB Ethiopian facility, if we could be able to have a digital trade window where we can be able to access export documentation, cross-border payment facilitation, contract validation from the Ethiopian Coffee and Authority, Minister of Trade, Chamber of Commerce for certification of origin, invoice digitalization, marketplace licensing, SME specific, all what we need, because for me to export a little 1 metric ton coffee, I have to visit several offices. And that's really tiring. And even though that we delegate people start to do the job for us, at the end there is always a moment that needs me. And it's very difficult because I can't be able to get the market, to connect with clients, and also to be able to visit to offices. So I think that I see promises. If we can be able to do that with the government support, it will be something that will eradicate the fragmented system, and we can be able to have all the process in one time. And also if the authorities can be able to provide a QR code for exporters like my company, where we can be able to have access all our licenses in one place, then we don't have to print. For me, I don't think we are safe because all our document is printed is all over. You know, everybody knows our license, everybody have that document. So at least things like that will be easy, and we can be able to run our businesses from all over, that we don't have to be bound in one place.
Thank you, thank you. I think you brought forward some connections with some topics discussed yesterday when we spoke about digital ID for people. And I think that as a company might as well link to, let's say, a digital identity for the company, and this creating an ecosystem that would allow an interconnectivity between multiple services. So it's a broader digitization of the society itself. Thank you for the contribution. I would pass then to Ngover to bring an international experience of Nigeria, and yeah, what is the biggest barriers that you see at this point in time?
So a lot of it we've heard already. It's really around the structural fragmentation, and it's three-pronged. So the first is technical fragmentation. You've got different national payment rails, different standards, messaging formats, operating hours. You've also got the regulatory fragmentation. So in addition to the fragmentation that we've just heard speak about that is largely domestic, if you imagine that on the scale of regional or international, where there are varying AML, CFT rules, different KYC requirements, licensing regimes, and it just adds layers of complexity. The third is liquidity. So one thing we've also sort of seen across the region and internationally, particularly for African countries, is the need for countries to maintain nostro accounts in multiple currencies. And what that really then does is it locks up capital, it increases cost. So these are the structural fragmentation issues that we see that we have to confront. And moving on to the second part of your question, what we are doing practically to try to overcome this is, as NIBS and as Nigeria, the Pan-African Payment and Settlement System, PAPS, for us, was very critical. So what we've done is not only connect into PAPS, so PAPS connects directly into the NIBS instant payment rail. And what we've done over the last sort of 24 months is to monitor transaction volumes, transaction flows, also speak to the connecting institutions to understand where the challenges are and what we can do differently and better. And PAPS had its first inaugural conference last week, actually. And what we did as NIBS was we hosted a sidebar event with participating financial institutions, with PAPs in the room as well, to understand what's next, what the issues are, what the challenges are. And the hope for us is that by playing that sort of lead role, it will allow us to understand what is required to unlock. In addition to PAPs, we're not sort of stopping at PAPs, we're also having bilateral conversations with various countries. And that's why we've been speaking to Ethiopia, we're speaking to Ghana, to Kenya, and the idea is, can we also create bilateral connections with the countries connecting via rail, looking at interesting ways that we can solve the settlement issue and the third currency issue, because that's the big elephant in the room.
Thank you very much. I think also it's interesting, you have multiple issues, as you mentioned, but you're also going to address those with a strategy that follows multiple ways. So there is no one solution fits all, and I think this is interesting. Now to Director Solomon, how do you reflect the opportunity to address those challenges into the strategy that you present yesterday, and I mean even more broadly, if not all those are yet reflecting the strategy that focuses also, of course, on the domestic market, which is the base in order to accept, as we mentioned before, an international payment lends always into a domestic system. What are your thoughts in this area? Thank you.
Good morning, all. Thank you, Francesco. So I think the first question, that what is the single challenge? So my colleagues here mentioned like fragmentation. So fragmentation is not only from the technical interoperability, but also from the regulation point of view. Every jurisdiction has its own KYC requirements and all other licensing issues, where it's also becoming difficulties. The system that operates in one country can able to integrate with other countries. So I particularly focus on Africa. So to see the challenges in cross-border, the first thing is the use case. As from the private sector mentioned, there are two issues. One is a business to business, the exporting. The other is an individual payments like remittances. From the business or from the export point of view, it's not only the payment issue that is being challenging, it's about also the logistics. So that also needs to be interoperable. The e-commerce has to also be flourished in Africa to have a seamless flow of goods and services. After that, the payment system also comes with, it is also the same problem. So the regulation harmonization is very, very important. Another issue is also a settlement challenge in the continent. So we are dependent on third parties' currency to make the payment final. So my colleague from Nigeria mentioned PAPs. So the main challenge in PAPs is using of a third-party currency, and this is going to be a big challenge for countries like us, where we have shortage of FX generation. So the solution should be, there should be a mechanism where the settlement by national currency be established, so that countries who have not much reserve in third-party currency can able to settle the payments, the cross-border payments, through their national currency. The other is the technical fragmentation, absence of interoperability. So a lot of systems in Africa, you can see. Here in East Africa, there is a SAPARI system, there is an PAPS. In the West Africa, there is also another system. So I'm looking for a commitment from African Union, from the head of states, that there should be a continental level payment settlement systems that supports settlements through the national currency, and that solve the problem of dependency on other countries. As you mentioned, our strategy in the coming 5 years, the one aspect is we are going to work on how we integrate the Ethiopian payment ecosystem, the payment system, with other countries' payment system. It could be in a bilateral. We have already started with the national switch. As you already seen, we have launched the IPS yesterday. That is the one most important element to tackle the fragmentation of our technical solution of various systems. So that IPS, or the fast payments, are the one way to solve the technical fragmentation between various countries. However, still the challenges in terms of adoption of IPS across Africa is in different stages. Some countries have advanced, like Nigeria. Some countries also not yet started. So it is quite difficult even to integrate all African continent to have a very efficient cross-border payments. But it is an option. The other option, that is why we also stated in our strategy in the coming 5 years to integrate the Ethiopian instant payment system with various bilateral or multilateral systems like PAPS and even with other countries. The other is also looking to other innovative, products or solutions like CBDC, which also be an alternative to solve these settlement issues, where the CBDC that being issued by the country's central banks in digital form of currency, so that is also easy to integrate with other countries' CBDC. But still, it's also a challenge if all of the countries are not able to adopt that CBDC. Yes, yeah. Thank you.
Yeah. Also at the moment, if thinking about bilateral CBDC interlinking, it looks very much forward-looking at this point, but definitely you laid out that you have a clear view and strategy on the way on how you will move forward the Ethiopian ecosystem toward the future to address this challenge. Now, moving to Antonio, I think he has a privileged point of view on the G20 roadmap, being part of the CPMI work. Out of you being there and being part of all these discussions with G20 countries on this topic, if you can tell us what is the aspects that are progressing faster. I think you already mentioned a bit, and also what are the ones that you still see there is a bit more concern, let's say.
Thank you. So coming last is always difficult because many of the issues have been discussed already, and you have pitched them very well, I think, the three different types. From a broader perspective, I think technical issues, there is a broader general agreement that technical issues can be somehow solved. It's a complex task, but are technical issues, and so with commitment they can be solved. What is really difficult to solve are governance issues, and here I'm referring to, for instance, the information you have to include in a payment transactions. So a cross-border payment is naturally more complex than a domestic one because it implies two currencies at least, two jurisdictions, and at least two regulatory framework. So what is mandatory in one country may not be mandatory or in another one. Think about this clash between data privacy and instead the need for more information for IML and CFT. So when there is no alignment between the two countries involved in the transaction, you may need to go back and to ask this information, and this slows down the payment. So harmonizing this regulatory framework for the exchange of data is really a key point, and it's something we are working on as a broader central bank community, but still progress is limited in this one. And another point I would like to emphasize, but it has been mentioned already, relates to FX conversion fees. So this is really a market issue. Some currencies are more volatile, less liquid, and so in order to convert from to or from these currencies, sometimes you need to use a vehicle currency, a liquid currency such as the euro or the dollar, and this of course adds up the costs. And these FX conversion services are usually provided by small set of providers. So there is also little competition in this field. And this is something that needs to be improved, of course. And FX fees constitute one of the biggest components for the cost of cross-border payments. So this is a key area. Going to the second part of your question, how our institutions what they are doing and what can do. So the Bank of Italy, as I said before, is pretty much involved in the cross-border payments roadmap at all levels. We have also been leading some working groups, and we are leading, our governor is involved in the coordination of the roadmap. He's co-leading an FSB coordination group on that. But on top of that, the bank is very supportive and very much active in the broader Eurosystem of central banks strategy to enhance cross-border payments. Why? Because we, Bank of Italy, designed and is operating TIPS, that is the fast payment system for European countries. And this strategy to enhance cross-border payments is indeed very much centered into TIPS, so this fast payment system. First of all, TIPS is multi-currency by design, and over the years we managed to onboard on top of the euro also the Swedish krona, the Danish krona, and by 2028 we will have also the Danish krona. So it's a multi-currency environment, and by next year we will also introduce cross-currency functionality. So all the currencies that are in the platform, we will be able to process cross-border payments, cross-currency payments between these currencies. So this is the first pillar. The second one relates to the interlinking of TIPS, a fast payment system, with other systems. We are exploring this possibility in two ways. One, multilaterally, exploring the possibility to join Nexus, which is a multilateral fast payment, multilateral interlinking arrangement for fast payment system, currently, let's say, centered in Asia, because many of the participants are Asian countries. The other way, we are exploring bilateral links. So one-to-one with single countries, and we are doing it at the moment. We are exploring the possibility to interlink with India UPI and with the Swiss fast payment system. And lastly, the third pillar of this strategy relates to, let's say, technical assistance support to jurisdictions who want to develop their and modernize their domestic infrastructure. And there is one key example. As Bank of Italy, we are providing to 5 Western Balkans countries basically a clone, a copy of our own fast payment system. And this will help them to have a domestic payment infrastructure that processes instant payments domestically, but also cross-border. So this is a very interesting project.
Thank you very much. I think also the advantage of the European Union is that a lot of the regulation has been harmonized over 20 years, even more than 20 years. And so this, of course, tackles one of the aspects that was mentioned, so harmonization of regulation, because this work has been done earlier on, so it has been possible for Banca d'Italia and also the other Eurosystem bank to work on this. Now, we are a little bit tight on time, as we had a little bit delayed embedded, so I'll ask you for the next question that is individual to be crisp. So Dagmavit, the question for you would be, you envision, of course, to expand your company to reach a global footprint. We wish you all the success possible in this. And as coffee is an important economic component of the whole Ethiopian export, what are the priority countries that you would like to see enabled, and what support do you expect from the financial sector present in this room for your company?
Thank you, Francisco. For the past 2 years, I've been traveling a lot to different exhibitions to USA, Europe, and Middle East Asia. And in that time that I got a chance to be familiar with the ITC trade map. So that opened my eyes that I was searching in the wrong direction, because there is a huge potential in Africa. West Africa, North Africa, and Southern Africa. But what's happening is when we do the trade map, they're purchasing the coffee from re-exporting countries, mainly from Germany and Switzerland, because of the logistical barriers that we face in Africa. So my target countries are focusing on Africa. I'm an African, so I want to focus in Africa. Algeria, Morocco, Dakar, Senegal, there is a huge demand. In a week time, I think I can receive 5 to 6 requests, but I couldn't be able to deliver to them because for the buyers, the price that I'm giving them is not practical. It doesn't interest them because of the cost. So for them, it's better to get it from the other countries than getting it from country of origins. The reason is they don't have the buying power. They are small roasters. They buy in a little quantities, but they buy frequently. For me, that is the target that I want to see instead of exporting 10, 20 containers target in an annual time. Because with that, I can be able to reach to the end consumers. And that will be also where I see that with the cross-border payment and digitally become friendly Ethiopia. So that is the target market. For the financial part, I'm a little bit familiar with the digital and financial sector in Ethiopia. So most of the supporters that comes from outside funders, it goes to the top tier exporters. So everybody forget the SMEs and especially women-owned businesses. So what I'm asking them that I want them to take bait on us and to start also supporting us. And I understand that they also need to have commitments and support. So at the end, it's Forex. But for me, I'm not here in the business for sake of the Forex. I'm here for impact. So impact means I need to go back and support the farmers because whenever that I travel to the farmers, they have got no idea what the beans are doing when it reaches to Starbucks or other big financial franchises. So that's where the target is. I want someone to work with me, says that, Dagi, here is the support, take this and come. So let me fail them. That's the request that I want to see.
Thank you very much. So this is a call for additional businesses is clear. Also, interestingly, as the exporting kind of triangulates toward other countries, so maybe the statistics on export may be false, because of course, if we are selling coffee to Germany and then Germany re-export to Algeria, looks like that the corridor, let's say Ethiopia, Algeria, just to make an example, is not so large so it would not be a priority looking at current statistics, but in reality there is an expensive actually trade triangulation that actually would be very interesting to also to assess through a further analysis. Go over to you. Nigeria is referenced in the Ethiopian digital payment strategy, and the question is how have you as NIBS with your leadership shaped the growth of payments? Because of course you started early, you have a very broad set of services, but I've been working as well in Nigeria, and I would like, if possible, that you present also how you have been transformative agents. What has been really something that was successful? So that can be as well, let's say, still and shameless, as our president say, from other countries. Thank you.
So under our leadership, but I have to stress it's been under the guidance of the Central Bank of Nigeria, because they've been a sort of foundation to the impact that we've seen, because there's been alignment between what the CBN is trying to achieve, what the NIBS can support with, and what the industry as a whole does together. And for us, there were sort of two key things. The first one is a focus on interoperability. So to do that, you obviously have to have rails that people trust, but more importantly, there has to be the understanding that from an infrastructure perspective, it's not about competition, it's about collaboration. So the entire ecosystem understands that the rails are interoperable and are meant for everyone to work with. And so we continue to push that message, and we demonstrate that through investments in ensuring that the infrastructure is stable, is reliable, is resilient. The other thing is standardization. So making it fairly easy for entities to connect to us. So not hoarding the information. So like the examples that we saw earlier from the presentations earlier today, we've got the sandbox. That means that you can come into the system, you can play around. We've also got standardized APIs available for all the use cases. And the third thing that we've been doing in the last, I'd say 12, 18 months that we found really interesting is we've got lots of APIs out, but the use cases we don't know because it's about the fintechs, the aggregators, and the interesting things that they do with our use cases. So we started doing what we call demo days, where we have a demo day, for example, the API for collections. We invite established institutions like banks, but we also invite fintechs and aggregators to come. And they showcase what they've done with a combination of the APIs that we provide. So in sort of providing services, you can be quite tunnel vision to say, I'm providing an API, for example, request to pay. But a fintech can take your request to pay, can take your NQR, can take a few other APIs, couple it together, build a dynamic use case with a fantastic user experience front engine. But we want the market to see that. And why we do the demo days is, one, to showcase what partners are doing with our products, but also to encourage other people to innovate around it. And the third reason we do it is to understand where there's still friction, so that we can lower friction. And doing all of this together helps to ensure that we're keeping the system robust, we're increasing user experience on it, we're seeing increased transactions, and we're not standing still.
Thank you very much. I think these are very interesting aspects of collaboration, which are a little bit more soft sometimes to organize, in the sense it requires effort, dedication, and a lot of discipline to also bring people together and then to fruitful, let's say, force them to collaborate on innovation, where so bringing down some barriers. Solomon, on your side, let's say, what are if we move a little bit more from trade toward retail payments, what activities would you have in place to support remittances, and but as well to support the export services in the strategy, but also how do you see the market now moving in this sense?
Thank you. To integrate the Ethiopian payment system, the first thing is actually to create a very seamless fund transfer and remittance services towards Ethiopia. Currently, as we all know, sending money is very challenging. And the informal remittance is higher than the formal. This is due to many reasons, but the most two reasons are, the first is absence of digital channels that facilitates the easy or the convenient way of transferring money. So this requires the integration of payment systems, and it requires also a very interoperable payment infrastructure. That's why we have been working in the last 4 or 5 years to develop that infrastructure internally, and to have many players outside of the banks, like fintechs. As the NIPS representative was saying, they're very important having of these fintechs, because they have the one who own the products, who creates the convenience to the end users. So in this regard, that is the absence of the infrastructure and digital means to send money. The other is, due to this reason, the cost is high when it comes to the formal remittances. So that in the strategy, by the end of 2030, we are envisaging that sending money from Ethiopia to abroad and to receive money abroad to Ethiopia will be seamless, like what we are doing internally. So it has, I understand, has also a policy issue, but I hope that policy issue that prohibits sending of money outside of Ethiopia will also be, addressed. Then the infrastructure that we are also developing and building will also enable every citizens that is living in Ethiopia can able to receive and send money digitally. Thank you.
Thank you very much. So our time is up. So I would just ask maybe one question from the audience, as Antonio had the opportunity to introduce a little bit more. Is there any question from the audience? Just one. No? One, two.
Thank you. I'm Ryan Hawthorne.
Could you please introduce yourself?
Yes, okay. I'm Ryan Hawthorne. I'm from Acacia Economics. We're working on competition enablers in financial services markets. And we were wondering, from a remittances perspective, we're sort of currently scoping a project for the Gates Foundation. And we're thinking about what kinds of challenges or what questions get asked by, if I could put it that way, decision makers at, say, the National Bank of Ethiopia, when it comes to, for instance, the national switch saying, well, we'd like to enable more cross-border remittance providers to come in so that we can have more competition, lower the barriers, and lower the costs eventually to consumers and to businesses of making cross-border payments and receiving them. And we were wondering, what kinds of questions do you get, and what are the sort of blockages? I mean, our perspective is just to try and think about what kinds of research we could provide as economists to kind of persuade decision makers, to open this kind of remittance space up to more remittances providers. Thanks.
Thank you. So I think the question is clearly for Otto Solomon, related to foreign competition in your sector and the opportunity that at least foreign company makes to you. What are these questions they make to you?
So if I correctly understand, so how the foreign entities are able to compete in?
Remittances, but you might have concerns. I don't know what the decision makers might have concerns about, such as AML, CFT, or other issues, just so that we can sort of try and understand. So it's not just foreign; it's more.
Yeah. So actually, from the experience being in the central bank and talking with various service providers in the market, and the first challenge actually is having multiple systems, and that needs to be integrated with all the banks. There is no central system where every participant or service providers can able to connect and provide remittance easily. That's why we have been working on having of this IPS, where you can able to reach every financial institutions and every users who have an account in financial institutions. That is the main challenge. The other challenge is actually having of this financial inclusion where the financial services are more concentrated in urban areas. So the agent network, the payouts, so even though the remittance company needs to provide, it's a cash out, has to give the money for the final beneficiaries. So that's reachability of the financial services in the rural areas also another challenge that I frequently hear from companies who are interested to provide the financial service, remittance services in Ethiopia. Thank you.
Then we conclude here. A round of applause for the panelists, and thanks again for being here.
And another round of applause for our moderator, Francisco Di Salvo. Thank you so much. It has been yet another incredibly informative session. This conference is doppio, right? You agree with me? This conference is on point. Oh my God, it's not? Yep. Thank you so much. And the panelists were talking from their personal experience, from their country's perspective, so we got a lot to learn from them. So we're going for a coffee break. If you have any more questions or if you want them to elaborate, not just them, but the panel before them, you will find them at the coffee break. So let's now take a break, stretch our legs, have some snacks, and then come back at precisely 12:10. We will be here so that we'll fasten up the next sessions. So yeah, 15 minutes is enough. All right, let's go enjoy our Ethiopian coffee.
All right, good afternoon. I just learned this yesterday, so I'm going to practice Salam Nacho. So hopefully I pronounce it right. Thank you. So it's a real pleasure to be here. Thank you for inviting me. And also a big congratulations for the launch of the strategy and the IPS yesterday. So my name is Teresa. I'm from the University of Cambridge. I'm a specialist at the Cambridge Center for Trade Finance and also Financial Innovation for Impact. So before I start my presentation on DPI and the role of emerging technologies and also some of the risks, let me first introduce my organization. So the Cambridge Center for Trade Finance, we call it CCAF. So we conduct research for stakeholders like policymakers, regulators, to ensure they have the right evidence to make informed policy. So we do a couple of things like capacity building and education. We have online courses that focus on open banking, open finance, all the way to digital assets. And we're launching our new course on competition and inclusive growth for ecosystem in January 2026. And I'm pleased to announce that Ethiopia is going to be one of our priority countries. So we tailor the course to suit the local context as well. So we also support regulators and policymakers in developing their regulations. And lastly, we support the building of sandboxes, innovation initiatives, and pilots. The Financial Innovation for Impact is actually a spin-off from the university. So slightly different with the CCAF, we collaborate very closely with the university, but we focus more on technical assistance, helping countries implement policy for the marginalized population and financially excluded communities. So that's all about the organization. What the research we're doing now is very interesting. We call it the Cambridge DPI Regulatory Program. So what we do is we look at the different core pillars of DPI. We have digital identity, we have data sharing, we also have payments. And we look at the interconnection of those, what is the right regulatory architecture so that we can build interconnected systems. We also look at how globally people adopted open banking, open finance, what is the right governance approach, what is the difference between regulatory-led or market-driven approach. And we also look at data protection and regulatory framework, how do we modernize it so that or harmonize it so that we enable more adoption and use case. Lastly, we also look at G2P payments and open source infrastructure. So to set the scene, I think a key question is why do we actually need more research on regulation and on DPI specifically? I think a lot of you will agree that DPI is just reshaping how digital financial services are being delivered. It is reshaping how users are interacting with different financial products. ID, payments, and data, they all come together as a system, as a network, as a lot of speakers mentioned yesterday, rather than independent technology verticals or blocks. So we need to understand the interconnection about that, and we also need to understand what are the current gaps in how we regulate. If we think about DPI as a system, it actually cuts across so many different regulators or institutions like the ID authorities, data protection agencies, financial regulators, or even telecom payment system operators. So bringing all these stakeholders together and mapping out what are the gaps, where are the overlaps is very important to ensure the DPI is designed to deliver the maximum impact and its potential, including financial inclusion, better competition, more innovation. So with this in mind, earlier this year, we published our report, Regulatory Considerations of DPI and Digital Financial Services, and we look at some of the shifting risk dynamics that is happening across the world. And as I mentioned, there are 3 areas we can look at. The first one is the interconnected systems of DPI. How does interoperability actually work across all these layers? What does that mean in terms of use cases, enablers, ecosystem development? And then next, we look at the gaps in terms of regulatory coordinations. How do we bring all these different stakeholders to look at one use case and ensure all the gaps are being addressed and there are right safeguards? And lastly, we look at how countries implement DPI. So DPI has a more general definition of the 3 core pillars: identity, data, and payments. But if we look across implementation in different contexts, we realize the approaches, the pathways to roll out DPIs is very different. So that global relevance but local variation is also core to understand. So I think everyone is kind of like very familiar with this slide, the identity, payments, and data sharing. I'll just emphasize that on data sharing, it's important to have a consent-based system so that users understand like why they're sharing the data, who they're sharing with, and have the visibility to manage those data permissions. And we also see that like with these three core pillars, some of the jurisdictions or countries are moving quite fast, including the launch of more advanced digital wallets or use of verifiable credentials that take these use cases to a different level. So for this panel specifically, as we think about like the integration of DPI, what are some of the new forms of governance or like operational data risks that may emerge? The way we look at this, we categorize it into three different buckets. The first one being the technological trends, the second being like socio-economic inclusion risk, and then political and regulatory trends. So I'll first focus on the first one, which is more about the technological trends. And here you will see on the slide, we highlighted three different developments. The first one being distributed ledger technology, DLT, and tokenization. So while we see that there's a potential for these new technology to transform how financial intermediation is being done with more transparency, more traceability, there's also this question about how do we ensure it's actually interoperable? Who is governing all these like decentralized network? And also there's question about like the environmental impact, the energy consumption in building these like technology. And then we can look at digital wallets, right? So in some countries, we already seen it is having like real gains in terms of like inclusion. But then how do we design the wallet so that users have control over the data and prevent potential like surveillance risk, security risk, or overreach? Lastly, you can't get away in the presentation without mentioning AI. So AI has a lot of benefits about like automating how compliance is being done, or helping better credit scoring based on a large amount of data, or even like translating different language into local language for better communication and customer understanding. But the governance about AI is still a little bit uncertain. There's a lot of development. Technology is fast changing all the time. So how do we ensure there is a good transparency and disclosure about how AI is being used? And then next, if we look at the political and regulatory trends, there's more discussion about the term digital sovereignty, about like countries or governments wanting to have more ownership over their digital infrastructure, their data flows, and even technology, so that there won't be too much of reliance. I'll keep going, but I think the slide is down. So there are like, less reliance on major players from major economies. And then the next bit, like we look at, thank you. So the next bit we look at is the importance to track the impact and monitor progress. So when we launch DPI, right, the design phase, the implementation phase is very important, but the post-implementation evaluation and building that feedback loop to understand what is the actual impact on inclusion, economic equity, what is the risk on fraud, consumer protection, how are disputes being resolved are equally important. Because without those like indicators or KPIs, it's very difficult for regulators to course correct or have timely intervention. And then we look at the socioeconomic trends and inclusion risk, which has been mentioned in a lot of panels, making sure that when we launch new technologies, we don't leave people behind. Not only those who has access to connectivity or device can benefit from it, but also like how do we ensure we can bridge the knowledge gap and usage for marginalized population as well. And I think that collaboration between public and private sector, governments, and local community working together in collaboration is key to bridge that gap and deliver this vision of financial inclusion. So when we look at like all this risk, we have seen how countries try to tackle it. And there are some of the common challenges that we have identified. The first one, regulatory fragmentation, as like all these regulations about identity, data, or payments, and even AI are so cross-cutting that they sit within so many different remits of different regulators. So how do these regulators come together to ensure they're aligned on the regulatory approach or even the governance arrangements? How is reporting or information being done? When there's intervention, who's actually taking the lead? So bringing all these like vision into one single strategy, like the launch of the strategy yesterday, actually helps ensure there is a coordination mechanism. And then another key bit is the design of the data protection frameworks. Is the current design of the protection frameworks up to date to support all these new use cases? So what happens if there's data misuses, breaches, or consumers just don't understand why people are sharing or using their data. How do we modernize it? And then obviously there's this ongoing challenge of limited regulatory capacity or even bandwidth to come together and rethink the regulatory architecture and a new approach to regulating DPI. So what we have done is we look across the world from US, EU, Australia, global approaches in the UK of all the existing good examples of coordination mechanisms and what are the key lessons learned. So I will emphasize that there is no one-size-fits-all approach. Different countries will have their own way of bringing different people together and ensure that works. But some of the key takeaways are on the next slide. So we have seen very effective use of working groups, committees, and forums with very well-defined remit and transparency of publishing the minutes and follow-up actions on the website. So there's clear accountability. We also have seen countries trying to innovate with their voting system, so using more weighted or even consensus-based voting system to ensure there's joint decision-making. And some countries like the UK, we have tried creating a collaboration forum that brings together regulators of different remits, financial, competition, telecoms, and data, together so that there is a shared vision, shared strategy, and regulatory alignment. And lastly, I heard yesterday there was some discussion on the sandbox. So piloting a joint testing a sandbox environment is also very important. So for example, if a fintech wants to test a new use case or a new product, having input from different regulators to look at different pieces and giving them the support can ensure there's actually a harmonized and coherent regulatory approach. To wrap up this presentation, I want to share this quote with you, which is the next generation of DPI will be shaped as much as by technological breakthroughs, such as tokenization, programmable money, and AI-driven system, as by our ability to govern their risk, reimagine regulatory boundaries, and ensure that these tools serve with public interest. So with that, I conclude my presentation. Thank you.
Thank you so much, Teresa Lam. And now we go to the panel discussion, Innovating Beyond Payments, the role of emerging technologies and AI in shaping Ethiopia's digital financial futures. And for that, I will invite the moderator, Naol Adisu. He's the technology advisor at National Bank of Ethiopia. Naol will take us through this panel discussion. Please let's welcome him with warm applause.
እንዴት አረፈዳችሁ? Good afternoon, everyone. This is what I call a prime time spot. Right after coffee break, before lunch. Everybody's in the room. Everybody got their coffee. It's going to be very interesting conversation today. I did prepare for this panel maybe a few days back. However, in light of what we've learned in the past, a few hours, including yesterday, I am switching it up. Therefore, I don't know what I'm going to ask. So bear with me. With that, I'm waiting for an image, please. With that, innovation beyond payment. What interesting title. Very encouraging work in Ethiopia. Keyword code, point of sale, software-based point of sale. IPS yesterday was launched. RTGS was upgraded to ISO 20022. However, with that advancement, with that innovation, I see how are we taking care of the merchants, for example, in a payment space? Yes, merchant adoption has been described as one of the challenges. And how about the users? For example, I was waiting for an image. Please put it up if you can. For example, you walk into a merchant store, which I happened to do 2 weeks ago. I've seen 12 or so QR codes on the counter. This is an experience I've had two weeks ago. You walk in a store, what do you do with this? This is what beyond payment innovation implies, right? How are we taking care of the user experience from the merchant aspect as well as from the user aspect? I will admit, I usually carry cash in my pocket because we've seen yesterday 92% availability rate, most of banks, and 99.9 by ITSwitch and RTGS as well. You combine that, we're close to 90%. 10% success failure is a very significant number, right? So today, I am an advisor to His Excellency Governor of the National Bank. However, the discussion, the conversations is my own. It does not represent National Bank's policy posture. So this is purely my own observation as well as my experience in this space. One more thing, we will discuss how AI and ML is helping or accelerating adoption and financial inclusion. However, I would like to stress that AI is not something that drops from the sky, if you will. It is a multidisciplinary sector. You have to have computer science. You have to have domain experts in the sectors. It can be economics, it can be health, it can be accounting, engineering, what have you, and pure mathematics and statistics. It's a combination of at least 3 interdisciplinary areas. With that, I will invite very distinguished panel on the stage. Dr. Taye Girma from Deputy Director of Ethiopian Artificial Intelligence Institute. Please come to the stage. Next, I'll invite Lij Kedus. When I saw the list, most of them are doctors, and then Kedus, I didn't have the last name. I said Lij Kedus. I met him today, and I was on point. Lij means young, if you will. Next, I will invite Miss Teresa Lam to join us on the stage, please. And Dr. Nathanael Argao from Kafia Financial Technologies. Thank you. Just quick round of quick questions. You're described, but please introduction. And what is one myth about AI you would like the audience to forget about? I have my own, but I want to give the panel a chance. I'm putting you on the spot, please.
Thank you, Naud. AI is not a tool now. It becomes now part of our life. We cannot avoid ourselves from AI because AI has got intervened in every day-to-day life experience.
Thank you. Kedus, please.
Okay. Thank you. So I would say, sorry. You're really putting us on the spot. AI is a monster. AI is something that would take our jobs. It would disrupt our economy. This is a fear that everybody has, but we see it as an enabler and a kind of an engine that could put us to the future faster. Yep.
Thank you. Ms. Lam, Ms. Teresa, please.
This is a very good question, and thanks for having me on the panel. I think I will agree with all the previous comments, and the AI is actually a tool, right? A lot of people use AI for different purposes. It may help with fraud, but actually it helps detect fraud better. So it's kind of I would say, a tool that depends on how it's being used by good actors and bad actors that will have very different impacts and consequences.
Thank you. Doctor, please.
Thank you. Maybe there is this saying AI is a buzzword. It's no longer.
AI is here to determine our fate, our future. So one thing we should forget would be AI is not a buzzword anymore.
Thank you. Again, in preparation for this panel, I asked AI what AI is, and this is the response. It says artificial intelligence is the simulation of human intelligence in machine. Operative word, simulation. And I asked AI about intelligence, and AI said, intelligence is the ability to learn, understand, reason, solve problems, and adapt. So one myth, I would say, is there is no artificial intelligence per se. The name itself, artificial intelligence, I think it's oxymoron. I would think it is more of augmenting intelligence, human intelligence, right? There is no pure AI. That is my opinion. In fact, in the past few years, my area of interest, is artificial intelligence, machine learning, data science. I was disillusioned because where is the intelligence? We'll come back to that later. Thank you, everyone, and I appreciate your candor. My first question goes to I'm analog as well, and paper is resilient all the time. Dr. Taye, the first question goes to you. Congratulations first on your recent advancements and operationalizing of some of the works AI Institute has been doing, in particular X-ray analysis to diagnose and find out disease. With that said, how is your organization currently pursuing? Any new initiatives, new upcoming? What should we expect from your work? Furthermore, what are the obstacles that you encounter in your attempts to implement advanced AI solutions for local issues?
So whenever we think of AI, the AI community, they list out some 3 challenges. One of the challenges is the infrastructures. If you have a very smart and complex algorithms, and then you need the infrastructure where you are going to run that. The second one is a quality data set, okay? A well collected and a well annotated and prepared and ready for the AI model training. And the third is the skill set, okay? So it's a global issue. So the skill set is also one of the major things that the AI community talks about. So what has been done by our institute regarding these 3 issues? The first thing is we have to have the infrastructure. So for that reason, we have built like 4 different data centers at different locations, which is well equipped by computational resources. But it doesn't mean that it is it's much more enough for everything that we do. The second one is we try to collect. The first what we did is we onboarded multidisciplinary professionals, so domain experts from different sectors. So by those experts, we try to collect a data set. So massive data set has been created and available in some of the sectoral. And then the third is the skill set. So when we start, the institution was established in 2020, and then at that time, even there was no higher education which has an AI programs in education system. So what we did is we tried to expose some of the computer science and the computer engineering to the AI, so as a short-term plan. And then on a long-term plan, we try to expand master's and PhD programs in partner with the local universities. So having all this in place, then the next step is trying to build the AI models. So for that, we onboarded the domain experts from different sectors, and we asked them to identify lists of challenges that they think is a societal burden in their area of expertise. So they listed out from those sectors, and we tried to build the AI models for some of the use cases. Areas where we have been successful: health sector, agricultural, law enforcement areas, and of course, in some of the financial sector aspect also, we try to build the customer scoring. And then the next step that we did is we have to also, now the AI community is working, other than the use cases, the AI community has shifted the state-of-the-art researches in large language models and agentic. So we started to build our own local LLM, which is highly tailored to our sovereign data on our sovereign cloud. And then we try to also build the agents for some use cases. And then you might have heard His Excellency Prime Minister saying about the Mela agents, that Mela agent is built in our institute. And that there are also 5 agents which are on the pipeline. And the other thing that we did is, okay, we created an ecosystem. And then the next thing is we should have a framework. So for that, we have in place the policies, and we have also in place the national AI strategies. Of course, the challenges that, I think the obstacles you have asked me again. So the major obstacles that we have is one, infrastructures. How is that infrastructure? Particularly the GPUs. We need a GPUs in place so that we can run complex algorithms. Because we have very limited GPUs, we are very busy in optimizing the model architectures so that they will be lightweight, and so that they will require less data, so that they will require also less computational resources. And then the other obstacle that we have is the integration challenge. What does it mean? That we have the AI model in place, and that should be integrated to the business processes. So that also needs the commitments of different organizations to onboard AI integration to their daily operations. The other challenge that we have is a brain drain. That's not a physical move of experts from here to somewhere else. They leave the institute and they stayed at home. Once they get exposed, they get experience being in the institute, they leave the institute and they stayed at home and they start doing freelancer. They become freelancers because the institute is not competitive enough in the global market. That is also one of the challenges. The other challenge that we have is AI needs a financial fund, an investment fund. You know, AI is not a quick investment return area. So it needs a very long term and a patient capital in the AI. These are one of the major areas that we have as a challenge.
Thank you so much. I think that was a great elaboration. I have a follow-up question later on. Lij Kadus, first off, congratulations on your effort and multiple collaborations in the country, including with Artificial Intelligence Institute. And congratulations with the name. As I said, it is truly local name, and it's a genuine and thoughtful name, so kudos for that. Hassab AI means, Hassab is idea in Amharic, so his organization is called Hassab. We would love to hear your work, your journey experience, similar to my prior question. What were your challenges? Where are you? And what should we expect? And furthermore, do you have any particular industry sector where you're solving problems?
Okay, thank you. So, first off, Lij is a royal name, right? So, I'll take that.
That's even better.
Hassab AI. Hassab AI is a local AI company. We focus on language solutions for the Ethiopian and African market. We fundamentally do two things. One is speech-to-text or transcription services. We have transcription models that we deployed on our own cloud infrastructure. And the second one is audio synthesis or audio generation. So why are we doing this? That's the core of it. Any technology, any solution that we're building, if it's not inclusive and if it's not for all, then it's not going to be as relevant as it should be. We talk about finances, we talk about healthcare, agriculture. All these need inclusive solution. So that's why we came with the solution of Hasab AI. So how do we actually implement Hasab AI? We have built solutions for call centers. This include for the finance sector, for the agriculture sector, for the healthcare sector. So you can automate your calls, 24/7 call center solutions. Support, customer experience support systems. This could be through chatbots, through SMS, all this with our local languages. This includes Amharic, Afan Oromo, Tigrinya, and soon to expand to Afar Somali. And also we would be including Swahili and other African countries' languages very soon. So, but in addition, I also want to add one more solution that we provide for the enterprise companies is a meeting note taker. How many of you know that 30 to 40% of meetings, because of lack of documentation, we lose the ideas? So now we have built a tool that can understand our language, our contexts, that can take a meeting minutes from every meeting, be it local or physical meetings. So as a whole, this is a brief intro about what Hasab AI does. So coming back to your question, what are the challenges that we're facing? One is actually funding, has already been mentioned by Dr. Taye. The second one is talent itself. Talent is very expensive. For us, I have a technology background. My co-founder is also an AI researcher, but bringing talent that can understand our own languages is very crucial, and it's very expensive. I don't know if you've been listening to the news. People are paying, I don't know, hundreds of thousands of dollars per month to poach researchers from one company. Google pays $1 million per month for one employee. Now, bring that back to our context. If our employees get $1,000, $2,000 of employment salary, then we lose them. So talent is very expensive. So for that, we need immense kind of patient capital that we can spend on talent. At the end of the day, if we don't have the talent to implement the solutions, then it won't make sense to build it. The second one is maybe now it's getting clearer, but regulatory frameworks, that's also one of the challenges. The PDP, which is the Personal Data Protection Proclamation that was just ratified a couple of months back, kind of puts a frame of how we process personally identifying information, or PIIs. So now, for example, for companies like us, building an infrastructure by ourselves is very expensive. And that is one of the challenges that we have. So we are currently also in partnership in support of the AI Institute, trying to implement these solutions according to the government's regulatory documents. So that's also a second challenge that we have. Yeah, I think as we go further, it's better to improve on that.
Thank you so much. I think the local language adaptation is crucial. Doctor, for AI, that was my follow-up question. The models that you build, what language is this expansive? Maybe I'll come back to that later. Ms. Teresa, thank you. That was a great presentation and walking us through how DPI in general and artificial intelligence can be utilized to address challenges on a grand scale. And some of the challenges that we're able to solve today, we were not even imagining 10, 15 years ago, where computing power was expensive and capabilities were out of reach, but the advancement of the hardware as well as the software is enabling us to imagine solving critical problems. However, since you are associated with a university, we've come to expect a great body of work from universities and institutions, and furthermore, collaboration between universities and the industry, because the industry cannot produce, and the skill set is also a challenge. However, this great opportunity and synergy with the industry can solve critical global issues, including unique African problems. Conversely, the same collaboration between research institutes and industry can lead to negative outcomes, such as aggression, manipulation, if you will, fostering extremism, and turning knowledge or information about a person into a commodity, which I call commodification, commoditizing our behavior, and furthermore, modifying our behavior. Dare I say, Cambridge Analytica, I'm sure you would understand. Given that, do you believe, as a researcher or as an university institute, the advantage enabled by advanced engineering, including AI, surpasses the potential risk? What do we have to do to ensure the benefit outweighs the damage technology can cause?
Thanks for the questions. And I think I definitely agree with you that this generation is actually blessed to have some of the most powerful tools to tackle some of the most challenging problems that we have. Like, look at the AI model, technology, like computing power. These are tools that we can use. And I think there is a great collaboration, so space that the private sector, the public sector, academia can work together to look at how in a more effective and inclusive way. So to answer your questions, I think definitely I see the potentials and advantages of AI surpass the risk if we have implement strong safeguards. So I think some of the gentlemen already mentioned, we're not going back to a world where there's no AI, AI is there. And from a very realistic and pragmatic view, from a regulator, policymaker perspective, what we can do is to better understand the risk, how technology is changing, and put in place the right framework to ensure consumer protection. And there's also another important point is the AI model that we're seeing today is very likely to be the worst model that we're going to see, because as regulators or policymakers work together. I think this gentleman mentioned the importance of having regulatory clarity, because building technology is very expensive. So having a vision, having a good framework, actually guide the investment, give startups, fintechs, companies using it, the right directions on how to deploy that. So from that, I think there is a key element of looking at the existing institutional mapping. So AI is very cross-cutting. It goes from sector to sector. It doesn't fall within just one government department or one agency. So what are the gaps we have right now? And if we think about AI, it's actually the power of the data. If I share data with a tool and that AI model use my data, I actually understand why I'm sharing this data. If things goes wrong, if someone actually misuse or they're breached, who should I go to? What are the redress mechanism, and which regulator is actually responsible for this? So I think having that clarity in terms of from a user perspective, what are the language, what are the mechanisms they actually understand? Financial literacy is key, and then also on the data protection frameworks, having a very clear guidance and working closely together with private sector and users, getting that feedback loop set up. Because I don't think AI use case is going to stay constant. Tomorrow, next month, next year, there's going to be new feedback, new risks that emerge from those use cases. So establishing that constant feedback loop that we get the most direct response from users, from private sector, will help I think reshape this regulatory mindset and design the right safeguard approach.
Thank you. Collaboration, government oversight, and data protection procedures and strong consumer protection are key. Thank you for that. Dr. Nathaniel, congratulations again on your outstanding contributions to the financial services industry in Ethiopia and in Africa. And your institution is becoming one of the symbol of Ethiopian ingenuity. I see, I'm not promoting, I see Kafia as a future Ethiopian airline type of impact in Ethiopia as well as in Africa and beyond. However, as good as your work, risk profiling or credit score, if you will, is one of the function, the tenet of any financial sector. However, historically, in developed countries, if you will, credit risk scoring has been used as exclusionary mechanism to exclude the majority and the underprivileged, because it's always the first thing that dawned on me a few years back is you need a credit to get a credit score, and you need a credit score to get a credit. How can you solve that? That itself is exclusionary mechanism. It is being used. So how are you ensuring the true purpose of risk profiling is not only looking at the financial sector's risk, rather looking at the individuals or the borrowers, how likely are they to succeed, right? Whose risk are we scoring? And depending on your model can be different. So what are the mechanisms, the controls you have in place to ensure we're not disenfranchising the many?
Thank you very much. I would say the approach and methodologies Kafia has been implementing for risk profiling or credit scoring has been inherently inclusive. I'll get back to that, but first let me give you some context on what we have been doing, the initiatives at Kafia. So Kafia, as you know, is AI native, data-driven financial infrastructure company, and we have been doing this for the past couple of years with the aim of high degree of financial inclusion, with a special emphasis on smallholder farmers, MSMEs, could be agri MSMEs part of it, low and middle income individuals. So the keywords here are, the first one is alternative data sources. Our risk profiling technology or mechanisms are alternative credit scoring mechanisms or methodologies. That means they exclusively based on alternative data sources. That means, for instance, to give you some insights to this one, a farmer who lives at the outskirts of Addis, let alone Jinka or some other far from Addis areas, but even at the outskirts of Addis may not afford to have cell phones, may not be part of the financial ecosystem even till this date. So talking about data sources, you cannot really talk about conventional data sources that are related to financial transactions, and then at the same time talk about financial inclusion. That's not possible. So we extensively implement alternative data sources. While talking about smallholder farmers, we implement weather data as an insight for risk profiling of farmers, soil fertility index data, satellite imagery data, and similar type of alternative data sources, very alternative ones, are being used, and that makes our approach inherently inclusive. The second thing is uncollateralized. So if you see the conventional credit system, it's collateral-based credit system, but with the advent of this AI and its frameworks, it has been possible to profile the risk matrices or the risk status of an individual by basing on alternative and very unstructured data sources, and that also gave yield to possibility to lend without any collateral. That is the second thing we have been doing. AI is at the center of our credit scoring, lending products. We implement really starting from classic machine learning algorithms to deep learning, and then recently We have also started implementing agentic AI technologies. Our credit scoring products has been evolving, and above all, our tech infrastructure is AI native infrastructure. So it learns over time, and it gets to that level of robustness that allows us to compute creditworthiness of individuals in a very high performance manner. And the impacts we have made so far, as you already mentioned, so far we were able to disperse uncollateralized, unsecured loans to more than 800,000 marginalized Ethiopian citizens, specifically for smallholder farmers, agri-MSMEs, MSMEs, and low and middle income individuals. This is, in the Ethiopian financial ecosystem, this is a very huge number. And in terms of loan disbursement, we have dispersed it using AI native tech infrastructure, around 55 billion. As we speak today, around 55 billion Ethiopian birr were dispersed using our technologies in collaboration with our partners, and specifically 2.3 billion has been dispersed so far for smallholder farmers. So I would say in conclusion, our tech infrastructure is inherently inclusive because we are not really looking after conventional data sources, but alternative data sources. That's where really marginalized, unseen and underserved societies reside. And by that, I think we achieve this level of,
Thank you. I think I appreciate the explanation, and 800,000 is a significant number where less than 2% credit goes to farmers and rural are in Ethiopia. So that itself is congratulations. My follow-up question, maybe I'll begin from you since it is fresh. You mentioned multiple times alternative data, using alternative data to gauge creditworthiness. I'll circle back, creditworthiness versus how likely is that person to succeed are two different perspectives. And then furthermore, it's really great to use alternative data. However, it hasn't been proven, right? The model has been proven. It's only a few years. I'm aware, some organizations use satellite imaging and phone data, bill payment data. How was your model tested, validated, and certified? Is it third-party tested, validated, and certified, or this is self-regulation by a private sector?
Thank you very much. We do have, policies and regulations, even nationally. We make sure we adhere to those policies and regulatory terms. But in terms of ensuring what we do is a state-of-the-art thing, and it addresses the real problems of the community. We have been in the community doing this same thing for the past couple of years, more than 3 years now. And that really gave us, year over year, that really gave us the testimony that what we are doing really is making impacts. And it's, we do also have some publications that reflects what has been achieved so far scientifically. But to dive a little bit more into how we do credit scoring, the first thing, as I already mentioned, we do use alternative data sources. But the way we implement AI along with these alternative data sources is called a meta-modeling technique. So for instance, previously I mentioned that we do use normalized difference-based vegetation index techniques, satellite imagery-based, soil fertility-based techniques. So we do have this models triangulation approach where each model is pertinent to a specific domain of data sets, and each model gives us the creditworthiness of an individual from that specific perspective. And at the center or at the core of what we do have these meta models that triangulates among the insights given from all those sub-models, telling us the creditworthiness of an individual. So when we say creditworthiness, it's more to willingness to pay and ability to pay. But that's not the only thing we do at Keyvia, especially when we say credit scoring. Our credit scoring system is not just to make or to create indebtedness, loan indebtedness for for our customers. We do have this technique called explanation. Specifically, we call it counterfactual explanation. So what we do is, the first thing, we score them. We tell them this is your credit score from willingness to pay and ability to pay perspective. But we also advise them what would be the right approach to increase the creditworthiness subsequently. We do not really build our credit scoring technologies for lenders, but it's also, because that's sustainability of even the whole ecosystem cannot be ensured if you cannot support or advise the borrowers beforehand. So our AI-driven credit scoring plus explanation frameworks advises our end users on how they should be working to grow in the short and long run. Yes.
Thank you. I think community certified, if you will, and result certified and field tested. Those are keywords I would take. However, it is something we need to look at in terms of third-party review to ensure, bias confirmation, if you will. Ms. Teresa, in terms of regulatory policy recommendations as part of your research as well as your findings, what are the areas where globally the top priority in terms of regulating technology, advanced engineering, and AI? Recently, I think in the past few days, Australia, for example, is banning social media and the like for adult, young under 16. I personally, I'm relieved and happy. Is this something that we would see in the coming years adopted globally? What are your findings in this space?
It is a very interesting question. I don't think we've done research specifically on social media ban. It's a very important topic. There's a lot of institute doing research on the impact of social media or increasing online presence. What is the impact on the development of childhood, in terms of the cognitive development, social personal skills. So there's a lot of research going on. I will say, for me, the top priority is still sit with data, because my personal perspective, the entire AI discussion, data is at the core. And if we think that the data belongs to the user, it's my financial data, it's my personal data, it's my healthcare data, how do we actually put the control back to the users so that they have a choice and they have a voice and the visibility required to understand how these data is used? So in Europe, we have GDPR. A lot of countries will have their own data protection frameworks and laws. But I think there is a bit of journey to think about those, how applicable are those laws for future use cases. If we think about agentic AI, right? Let's take open banking, open finance as an example. And the agentic AI can actually perform financial transactions on my behalf. For example, I can ask them, tomorrow I want to get some eggs for breakfast. Can you go to a supermarket, online supermarket, and help me place an order? So what if there is something wrong in that process, the consent, or there is loss involved? So how do we actually ensure there is a redress mechanism and remedies available for consumers? So buying eggs is a very simple example. But what if I ask the agentic AI to, maybe I want to switch my savings account from one provider to another provider, or close an account, or change my products? So those are what we call kind of irrevocable actions, and it's much more difficult to estimate the potential financial loss and consequences. So I think putting together the right liability framework, having that clarity on what goes wrong, and thinking more from the user's perspective rather from a technology perspective would help.
Thank you. I've asked ChatGPT 6 months ago to build me a bridge. I'm still waiting. In terms of Kedus, investment, require to ensure AI is equitable, and that is one of my concern. The huge investment currently is being made mostly in already developed countries. The amount of resources they are putting in the AI infrastructure. I have a concern that as a result of that investment and advancement, we may see worlds transfer from developing countries to use the tools they have produced, investing, because it's an investment, right? At the end of the day, I'm concerned, wealth transfer, both of you said skill, brain drain, it's also part of it. How do you see we can tackle that as a country and as a continent?
Okay, so investment is at the core of AI technology. This is pretty obvious. But also, we have to know necessity is mother of innovation, right? So because we lack a lot of investment, that's where we get creative. Everybody knows about the DeepSeek model that was developed. It took around 10% of the total capital that was used to develop OpenAI's ChatGPT, right? So now, that's because of the lack of investment, the lack of infrastructure, right? So I would say we have some kind of competitive edge when it comes to that. But also, we recognize that that's a huge barrier. The other thing is we have a lot of problems to solve as well. Catering the solutions that have been already developed is something that we're actively working on. With the support of the AI Institute as well, right? This could be in agriculture, in healthcare, in finance. One of the things we're trying to do, for example, is voice biometrics, right? It's something used to authorize payments in the financial sector and everything. So now, these kind of things could be very unique for our world and for our side of the world. So we can also basically create wealth based on our own unique problems. So we are innovating and solving for our own problems. So that puts us in a unique position, yes.
Thank you so much. Fit for purpose innovation. Final question, Doctor. Just following up on these models, ChatGPT, LLM, whatever number it is, should we adopt the models as they are, or should we ignore that, learn the capabilities, and come up with our own models that cater to our unique situations?
Okay, we cannot totally adopt the already existing platforms, because if we are going to use them as all, we're going to lose our data sovereignty. So what we did is there are an open source, lightweight models out there. So what we did is we brought that lightweight models available as open source, and then we built our own sovereign data, which are well vectorized and combined with that freely available open source LLM models, which is deployed on our own cloud. So, and then there is a possibility that already open source deployed in our data center or a cloud can access the data from out there. But the dominant one is our sovereign data. In between that, we build an agent, which is a very critical agent, which is highly dominated by our sovereign data. But the data will not be uploaded to somewhere else. It will be within our cloud. And that's how we are building the LLM models that is trying to fit to our own context.
Thank you. The image you see on the screen is this is inspired during the Deep Blue versus Gary Kasparov match, where we were told that AI beat world chess champion. I don't happen to believe that AI already did, because I'm aware over 300 individuals, professionals, participated in the development of the program that played against the person. So my opinion is, it is 1% against 200, 300%. I don't really think it was an AI. This is one of the games, strategy games. Still, AI cannot beat. So AI, if you're listening, Meet me at Arima next year. You guys try it. Very interesting. Over 17,000 average moves, where Chase has only 30. So the in-the-state database for Chase was way simpler. That's why even AI beat the Chase professional. I'll beat this in maybe 20 years. If you do, there is 10,000 prize for this. Thank you, everyone, and thanks the panel for joining and very interesting, enlightening conversation. Thank you all. Round of applause, please.
Thank you very much, Naol, for a great moderation. Yes, let's take their group picture. Actually, one of the best things that I discovered recently when I engage with AI is I ask, whenever I have a project, I ask my AI to give me the best prompt on how to do that job and how to ask him better to give me better results. So I ask the AI to ask itself to get him the best, and then I use the same questions and ask the AI because the prompts are now delivered by the AI. So in my own way, I'm tricking the AI, I guess. Okay, let's go to the next session. There's a little bit, this one is a little bit different. Instead of a presentation, we'll have a keynote to set the tone of this next panel discussion. So for the keynote, I will invite His Excellency Mr. Eyob Gebreyesus. He's the Vice Governor Corporate Services at the National Bank of Ethiopia. And with that keynote, we will set the tone for the next one. Please help me in inviting with the warmest applause His Excellency Ato Eyob Gebreyesus.
Good afternoon. Good afternoon. I'm sure you have a nice morning with all the sessions. And now we'll have a different topic, more interesting, more human. Of course, as more financial institution representatives are here, the whole banking is about trust. Technology is also a trust. So I hope you will enjoy, and please, I kindly request your attention. So, Excellencies, distinguished guests, colleagues, and panelists, welcome to this pivotal discussion panel on trust in the digital age, a topic that is not just only global, but deeply relevant and connected to Ethiopia's digital future. It is also a topic at the intersection of technology and finance. In today's hyper-connected world, trust is no longer a soft value. It is the foundation of every digital interaction. From the way we pay digitally to how businesses safeguard sensitive data, trust determines whether innovation succeeds or fades. Ethiopia is undergoing a notable digital transformation under the government's full commitment and with implementation of the Digital Ethiopia 2025. Of course, we'll have a new one, 2030. We have seen remarkable progresses. To mention some, internet users have grown tremendously, and mobile subscription now exceeds more than 80 million. Covering 63% of the population, yet only 35% of Ethiopians are online. This means 65% remains unconnected. Of course, this highlights both progress and persistent gap for potential growth. Digital payments and e-government services witnessed significant growth. The introduction of a centralized platform has led to the digitalization of a wide range of government services. Additionally, digital payment methods have seen remarkable improvements in the last decade, providing people with convenient and efficient ways to send and receive funds within the country. The adoption of the digital ID, FIDA, is another critical component of digital public infrastructure that fosters the advancement of digital services in the country. In a related story, in 2024, Ethiopia emerged as one of the most targeted nations for malware attacks as reported by Interpol, highlighting a significant escalation in cyber threats against its critical infrastructure. This includes vital sectors such as government systems, financial services, and strategic projects, all of which now face a growing array of sophisticated cyber threats ranging from phishing schemes and ransomware attacks to intricately crafted social engineered fraud. These malicious efforts not only jeopardize the security and integrity of essential services, but also erode public trust in digital systems, posing substantial risks to the country's digital aspirations and hindering its progress towards a more connected and technologically advanced future. Ladies and gentlemen, why does trust matters? Because we trust. Without trust, innovation stalls. Consumers hesitate to transact online. Businesses slow adoption, and the promise of inclusion fades. In building trust, one shall put emphasis on the following key aspects. We should take cybersecurity as a national imperative. Cybersecurity must be prioritized as a national imperative in Ethiopia to safeguard its rapidly evolving digital landscape. With the cybersecurity market projected to grow significantly in recent years, it is crucial to address existing gaps in enforcement skills and infrastructure. Initiatives like ETIOCERT, of course you will hear more during the panel discussion, and the guidance from INSA and NBE, National Bank of Ethiopia as a regulator, are vital for laying the groundwork. But a more robust collaboration among government entities, the private sector, and international partners is necessary. This collective effort will enhance the defense against sophisticated cyber threats, protecting critical systems, and unlimited fostering secure environment where innovation and digital utilization can flourish. In order to harvest the benefits of digitization, countries and providers of financial and technology services must pay serious attention and invest vastly in threat detection, incident responses, and creating secured cyberspace. More importantly, regulators, telcos, banks, and fintechs must share threat intelligence and align on minimum security and consumer protection baselines. The second one, we should take consumer protection at the center or cornerstone. Even though there are laws on consumer protection and electronic transaction, enforcement is at its conceptual stage. Existence of fraud, lack of readiness mechanisms, and limited awareness undermine confidence. As has been stressed many times yesterday during the opening remarks, the draft National Digital Payment Strategy rightly positions trust as foundational pillar and specifically emphasizes on the need for advanced cybersecurity, adoption of ISO 20022 and global security standards, fraud reporting and consumer protection and redress mechanisms, coordinated incidents reporting and response across institutions, financial literacy and digital safety education, data governance and privacy frameworks, and clear dispute resolution, and as well as effective information disclosure. And the third one, which is also a most important one, is resilience as a strategic priority. Service disruption could happen anytime, anywhere, be it individual or an institution, due to cyber attacks or systemic outages. But the most important matter is to ensure system redundancy, contingency planning through coordinated incident response, robust data governance, reducing single point of failure, and operational steadiness for critical systems. Everyone understands and calls for these capabilities, yet the execution will require huge investment in skills, technology, and governance. So of course, we have invested quite a lot on key infrastructures. We need to now invest on building, or ensuring public trust. To conclude, trust is not a one-time achievement. It is a continuous program of investment, governance, and collaboration. I look forward to a practical discussion on how we translate these priorities into policy, strategy, and operational actions. Please join me in welcoming the panelists to explore which regulatory and technical devices will most effectively strengthen cybersecurity, consumer protection, and resilience across Ethiopia, Africa, and the world. As has been said, let's remember every algorithm, every transaction, every breakthrough must ultimately serve the public trust. I thank you.
Thank you so much, Your Excellency. Your Excellency Ato Yob ገብረየሱስ, Vice Governor of Corporate Service in National Bank of Ethiopia. So now we'll go to the panel discussion, Trust in the Digital Age, Strengthening Cybersecurity, Consumer Protection, and Resilience. Yesterday there was a questionnaire, and the top answer by all of you was about trust, and here we are to talk about that. So first I will invite the moderator, Mr. Tilasoni Benjamin Musuku. He's the Special Financial Sector Specialist at the World Bank. He will be moderating the session. Thank you. And I will invite now the panelists. The first one will be Her Excellency Mrs. Tigist Mohammed, Director General of INSA. Please join the panel, Your Excellency. Thank you. Next is Mr. Muhdin Shifa. He's the Director of Consumer Protection and Financial Education at the National Bank of Ethiopia. Mr. Muhdin. I'll also invite Mr. Amara Asafa, Executive VP of Technology at Commercial Bank of Ethiopia. Mr. Amara Asafa. Last but by no means the least will be Mr. Aid Wilson Shah. He's the Principal Security Architect at the Bank of England. Mr. Shah. So, Mr. Musuku, the floor is yours now. Thank you.
Okay, sure. Thank you. Thank you so much. Clearly, panel, we are standing in between lunch for everybody, and hopefully we'll be quick with this session. Maybe just to set the stage, I think as the Vice Governor said, I think he's looking towards a practical sort of conversation that we may have. So to just place this into context is that with all the developments in the payments ecosystem in Ethiopia, there's a rapid expansion. With that, threats to trust are also increasing, undermining confidence and impacting adoption rates for these digital payment solutions. I think the National Payment Strategy identifies the pillars for this, stronger cyber security supervision, global security standards. There are a lot. I think the list there in terms of the strategy is pretty much comprehensive. I think for this session, sort of 4 things that to help the participants better understand. So maybe help us to understand Ethiopia's cybersecurity and consumer protection landscape, help also to explore real-life examples of cyber incidents and response protocols. The third issue is really maybe to discuss some of the reforms that are underway and implications for the payment systems strategy in terms of resilience, building up resilience, building user trust, and regulatory oversight. And of course, I think without mentioning collaboration, I think would be amiss. What's the role for collaboration in sort of preventing fraud, ensuring maturation in cybersecurity and consumer protection? I'll start off with you, Your Excellency, Tigist. From a NISA sort of vantage point, what are the most pressing and emerging cybersecurity threats that Ethiopia's financial sector is facing?
Good afternoon, everyone. First of all, I would love to thank you, National Bank of Ethiopia, for inviting us as INSA to elaborate about cybersecurity posture in the National Digital Payment Conference. So, as Your Excellency mentioned earlier, and the keynote speech mentioned by His Excellency Ato Yob, the cybersecurity is a main pillar for the national digital payment sector, because as you all know, as a nation we are entering in a digital transformation era. So the digital inclusiveness of the country's perspective gives us a lot of challenge. Once you are connected to the world, you have to face a lot of challenges as well. So the cyber threat landscape becomes more incrementing. So if you have seen all the digital reports that claim as INSA, the cyber threat scenario is incremental as compared to the previous times, because the digital payments, fintechs, and other payment aggregates becoming incremental. So from that perspective, of course, as INSA, we are here mandated to protect the critical infrastructure of the nation in building national security. So we have to have our own ETO-cert, which is securing the infrastructure 24/7, specifically from the national gateways. As you know, threats might be from inside or outside. So we are working in 24/7 perspective of securing the nation. But this is not the only means that we are using for financial sectors, because we have to have a lot of solutions to mitigate this area. The first thing, as you all know, trust is a basic pillar for the financial security to be incremental and to have an inclusive scenario. As you all know, our population is not as such digitally literate, so we have to have our own national awareness program for literating the people on how to use these digital finance systems, specifically when they are using their own digital gadgets, like mobiles and other devices. So that's the first thing that we are using and implementing. The second thing, as you all know, critical infrastructures like financial sectors have critical assets, like financial data and personal data or personal information. So the main thing that makes it very crucial is these two things, like the financial aspect as well as the personal data. So we have to have our own specific critical infrastructure protection proclamation that is in the hand of the Minister of Cabinet. It's going to be endorsed very soon. That mentions specifically how to secure these financial sectors. Of course, as the keynote speech status, we have to have our own ETO-cert. We are working in collaboration as a regulatory entity with National Bank of Ethiopia in putting standards, policy, guidelines for how to use the cyber area, specifically in securing the assets. So we are developing our own analysis with National Bank, INSA, ITSwitch, and of course, biggest financial sectors and banks. So we conducted a research on this sector, and the main critical thing that we have to have is, as mentioned earlier, to work in collaboration and to have a common landscape in sharing the threat intelligence platform. But to endorse that, the first thing, as we have seen these days, the main cyber threats that INSA is facing, specifically from the financial sector, I'm not mentioning the entire critical threats from the government aspect, since we are connected with different critical infrastructures like telco, utilities, education sector, health, and others. But from the financial perspective, phishing is the number one, the top attack that we are reviewing and having a good information on. As you all know, the phishing attack specifically focused on the social engineering perspective. So as I mentioned earlier, most of our financial users or customers, they are not as illiterate as the other people. Specifically, from the perspective of inclusiveness, we are relating the digital coverage for all the population. That makes the phishing attack very simple, because people use different information. They steal a lot of data from the clients and customers. As you all know, through phone call, it might be a message and different emails. So you might click that link, or you might be social engineered to be attacked by the fraudsters. So this is one of the top significantly challenging the finance sector and our community and the digital payment system. The second one is ransomware. As you all know, it's not only in Ethiopia, it's all over the world. As you all know, of course, gaining unauthorized access and having the entire control with the servers and other resources, that will encrypt the entire resource and denying access to the environment. That makes customer ask a ransom to be paid or demanding money. That's the second one, as a basic threat that we are facing. This will affect the critical systems and infrastructures as well. The third one, as we all know, it's the denial of service attacks that is mentioned in our alert as well. This will divert the attention of the internal cybersecurity teams, because as you all know, denial of service is hitting the servers and the infrastructure repeatedly. Then the team, the technical team, will be focused on the other environment rather than securing the environment. So that will divert the attention of the team. The main and basically the critical things that we underestimate always is the supply chain attacks. That is from the third-party integration point of view. As you all know, we are using different products, services, and other solutions from third party. So if you don't give that much focus, this is another critical cybersecurity threat in the payment environment that we are facing as well. Because if we don't have a zero trust environment in the banking sector, it will be very critical, because we will allow access to the third party application. Lately, I will come up with the mitigation mechanisms if we have got a chance to have time. Otherwise, it will be a very critical attack as well. So as I mentioned earlier, the financial system is a very critical environment. So we are communicating with the community and the public. We have a trust environment, as mentioned earlier, in order to have a good communication through the payment system, payment transaction, and others. Otherwise, it will give a bit mistrust that will create economical crisis in the government, the financial sector, and as well as the people's trust as well.
No, thank you. Thank you so much for such a comprehensive answer. And I think which offers a very good segue to shift from that sort of oversight to maybe Amer, using the CB experience. You recently experienced some cyber-related disruptions. And given what Her Excellency has just explained, in your view, what are some of the most important takeaways from that experience? What are the lessons that you think you can share with the conference participants? And if you could really present this in sort of 3 layers, look at it from a technology, an operational, and a governance sort of point of view. Thank you.
Thank you very much. Thank you for having me here. I think it's been a year now, so the incident was really highly educative for us. We also used that as a ways to educate our customer and the community at large as well. CB has been undergoing transformation for the last 3 years. We've been deploying a lot of technologies to ensure customer experience are improved and also digital moving. As you have already seen yesterday, those transactions happening over the years, over 75% within CBE. So the share is so huge. This is the strategy we have to win, which result in this kind of good results. So we have our biggest share in digital transformation. What was happened is, as a part of that transformation, while doing a modernization activity, a human error happened during a release, which result in undesired way of system operations. That was partly coming from our team's experiment of this kind of technologies, build up confidence, overconfidence, let me say, which result in not following the right process and the procedures which we put in place because of this level of confidence that build up. So pretty much one of the things we have seen around there is, like, even if we have a change management, release management process that you have in place, that's not only good enough. We need to change the culture of the technology operators in a way we follow the right governance policy procedure in place. That's one big lesson we pick. It's like a plane when it is flying, the pilot and co-piloting tick some of their checklists before they start flying. I think on some of the critical infrastructure follow to some extent that kind of procedure and cultural element of which we learn and pick it and to enforce. The other aspect of it is the automation, the need of automation itself, reduce error. Of course, human error is unavoidable, but we can still reduce it. I think process automation, especially around software development, the DevSecOps methodology which is there, which we need to put in place to reduce this kind of error, is some of the things we pick. We were practicing it, but it will also help us to enhance that aspect of it. The other aspect of it happens result in a big chaos. I think if we put in-depth monitoring, which can enable us to detect immediately anything happens, again, even if we have also SOC and NOC and all kind of technology in place, I think that's also not good enough. We need to go down, profile minute over seconds where we can see exactly what changed in it. I think that's also some of the things we picked to reinforce our monitoring capabilities. The other part, which is very critical, the defense in DIP's concept, the zero trust approach into protecting the infrastructure on way of dealing with the cybersecurity. Authentication, authorization, and segregation of duty where basically is critically important. We should be able to put in place to enhance our posture in dealing with this kind of changes. The other aspect of it is that, as it is rightly mentioned by His Excellency, Deputy Governor, the need of backup and recovery plan and the implementation of immune logs, which basically is very important for backtracking and managing this kind of situation, is very critically important. The other aspect we have seen from our engagement is incident playbook after it's happening. It was like, for us, we have an incident management procedure in place, which we didn't test it in real life. We use that to test it, so it's a big opportunity for us to see the way we manage, the way we get together in situation room after crisis happening and take care of it, the coordination, all that as it is written, the way we practice this is some of the things we see, learn from it a lot as well on that side of it. The other aspect of it we see is response to the customer and the communication aspect of it. The impact of social media is what we have all seen during that situation, where at some point, is it the organization we are leading, or is it something they are talking about is where we come to communicating to the public? How fast the social media was propagating false information was also the lesson picked from that exercise, I believe. So the frequent communication from situation room, digesting data, putting a different leader or a layer of communication at the right level, at the right channel is a critical point, which I think everyone has to learn as a lesson to put in place. The role of collaboration, coordination, the role of regulators, as well as the role of other financial actors also was some of the things that we have picked as a big lesson, especially whenever that happens, when we call in our regulators to come to support. The fastest actions they took was an exemplary thing to learn from, and also we put all the contact and relationship we had in all our partners, including all other banks, on top of formal ones. The role of INSA in coming to put audit team of expertise in place to check everything, what's going on, was an amazing thing. So that was, again, one of the things we have picked on how can we, on top of, personally communicating, putting together and institutionalized in a way it can be, fastly be managed, is some of the things we have seen. So the role of legal enforcement as well was also tremendous, where to some extent we challenge also is the criminal law we have on all that can be capable to deal with the digital challenge we are facing today was being also be discussed, and I think some of the critical point was picked around there. So there was so many tremendous learning that was coming for us, and the most important thing is the learning we give it to the public at large as well. So we see all the transaction going on within us because we have that capabilities we build within us. And two, rob or fraud happens, and then you cannot go away just like that because having that opportunity and then getting money, and then you cannot just like that disappear. We see you, we track you, we get you. That was, I think, one of the biggest lesson we put forward to the public to learn from there. So that change was also what we noticed. Whenever some small thing happens today, public was communicating to us, there is this happening. What's going on? Are we okay? It was a huge learning that from that aspect as well. So these are some of the things that, in the interest of time, I can keep going. So many learning out there, but I have to stop here, I guess.
No, clearly you give meaning to the old saying, never waste a crisis. You really extracted as many lessons as possible from that incident. We've got two central banks on the panel. Before I bring in Ed to sort of give us an international perspective, I want to bring in Mahudini from National Bank of Ethiopia. We know that the payment strategy prioritizes consumer protection and issues around and recourse. From your experience, what are some of the most common digital payment related issues or vulnerabilities consumers in Ethiopia facing today? And how is the central bank addressing this? Thank you.
Thank you very much for the opportunity. So yes, since yesterday we have seen that as digital payments expand across the country, challenges that are emerging, which really undermine the trust and confidence of financial consumers. And this consumer situation is caused by several factors, and one of can be the personal circumstances of the individual, which is related to their digital literacy knowledge, or factors associated with poor practice at financial institutions in relation to their relationship with financial consumers. And there may be a supervisory gap at the central bank, So there are a number of challenges, but I can mention some of consumer issues that came into light, due to reports from the financial institutions and cases filed by the consumer to the National Bank, and we are also informed by media on some of the challenges. So one of the most important challenges that consumers currently facing are unauthorized transaction and privacy concerns. So we are hearing reports that consumers are reporting transaction which they did not initiate and authorize. And this happens usually when they lost their funds or their personal credentials are compromised, or where there is weakness at financial institutions which give access to information, particularly by insiders or other third parties which are linked to the financial institutions. So they temporarily take over the account of the customer to transfer transactions which the customer does not have any information. That's also a biggest challenge. And the other one is related to social engineering fraud. So I cannot exhaust all kinds of frauds. Some of them are already mentioned by Her Excellency. So a typical, consumers receive a call or a message from someone who pretend to be a financial institution, and they are tricked into sharing their personal account information, lose their money within their accounts. This fraud situation happens simply because many of the digital financial consumers does not have the digital skill, but the adoption rate is very, very impressive. I do not want to over emphasize it. Because in many countries, particularly during the early period of rapid adoption of financial services, this is a very common situation. So the thing is, we need to strengthen we need to strengthen the mitigation techniques at financial institutions and at the central bank, but keeping the pace with the innovation is very important. The other thing that came into picture to the National Bank is still transparency is an issue related to digital finance. Still, some of the financial disclose all prices of the product to their, because most consumers the financial services after they made the transaction. And some bundled several costs frequently change their prices without adequate notice to the consumers. And this is really a challenge for financial consumers to interpret the cost of the services and to compare services across the financial institutions, and which undermine the quality of the services they are receiving from the financial institutions. Inadequate recourse mechanism at the financial institutions. Some of the of course, the National Bank has standardized compliant handling financial institutions, but some of the financial institutions, because they're all financial consumers, particularly for people with low level of skill and knowledge, is difficult to use the call center, but these call centers are not call center, but these call centers are not equipped with digital tools which can handle complex fraud complaints or dispute cases. That's also another issue that we are facing at the moment. And the other one that I would like to mention is transaction failures. Of course, the up times for the national switch and the RTGS is exceptionally high, shortcomings at financial institutions, so which could break the chain of the reliability of these financial digital payment services in the ecosystem. So systems internally may go offline, or the apps of this financial service may not work for the consumers, and this sometimes network errors may interrupt the transactions. These kinds of challenges may lead the consumer to take risky behaviors, believing that if they didn't receive any notification, they can repeatedly send the money to the sender, to the receiver, and sometimes the fund may be locked in a limbo where the sender and the receiver cannot access. And this usually, hurts small businesses who rely on timely payments and sales. That's also another concern that we should take into account as a central bank and as a financial institution. So to mitigate and address these situations, the National Bank so far has taken several measures. One is specifying its mandate on consumer protection. As you have seen, the recently issued proclamation, there is a clear mandate for consumer protection in terms of the market conduct supervision and the enforcement measures were clearly indicated. That's a major milestone for us. And the second one is supervising financial institutions on risk situations as specified here. So that's also a very important measure that we are currently taking on. And the other one is some of the, the mitigating measures that I mentioned, for example, the measures related to fraud, data privacy are already included in payment instrument. We mandated financial institutions to have a comprehensive risk management framework and the application of two-factor authentication. And we have also a requirement to apply a real-time KYC verification for the financial institutions. And there is also to undertake a system I would like to highlight is the disclosure requirements. We have standardized disclosure requirements to make transparent all the prices and costs to the consumers at branches, but also on the apps and many of their platforms. That's also a very important step that we are currently enforcing. The Tracy, here in this area, Tracy, here in this area, we are organizations and DPs to roll out financial literacy across Ethiopia. Of course, we understand that financial institutions are primarily responsible for rollout of financial literacy to their consumers, but collaboration can bring synergy, and we can pool resource and expertise to roll out financial education, as financial education requires significant resource and time and resource. So a number of stakeholders have stake in this regard. That's a very important thing that we have done so far. And recently, most of you remember that we conducted a nationwide financial literacy week, and digital literacy and digital financial literacy was a key priority, a key motto for that campaign, and we'll continue to conduct that kinds of campaign. And we will mandate also financial nation to invest in financial education and campaign activities. These are some of the measures that we are taking.
Sure, thanks. That's quite a lot of work. You must be very, very busy. Ed, last but not least, Bank of England, based in London. What sort of experiences from the UK, as well as, also globally, can you share with the conference participants in so far as if practices, what's most effective in keeping secure real-time payment systems, making sure that they are running, they are resilient in a highly interconnected financial ecosystem?
Thanks so much, Ben, and thanks for having us on this panel. It's a real honor to be here. Thank you. I think it's probably good to start with the observation that our payment systems are although they do lots of very exciting things and lots of innovation there, we can sort of think about them as really just messaging systems. They're computer messaging systems. And that's a really useful simplification because we kind of know a lot in this room about how to secure messaging systems. A lot of us have probably got a messaging system in our pocket right now. I'm holding one to talk to you. So we're kind of familiar with messaging systems, we know how to secure them. And that's a really useful place to start from because we can bring all of our existing security thinking to bear on this problem. Even as our payment systems diversify and we kind of innovate in that space, we can still use our existing thinking as kind of good tried and tested security perspectives to defend our systems. So what that means is good things like robust encryption, making sure that we have a secure development cycle, making sure that we secure our supply chain, operational security things, so things like good monitoring, good reporting, and of course, governance, compliance, regulation over the top of all that. So I think that's a really good place to start from. We don't have to necessarily reinvent the wheel. We can bring a lot of good security thinking in from our own experience in working on the systems. I think another thing to draw out is this thing about risk-based thinking. A really important place for us to start. And I draw it out specifically because I think this is what really sets payment systems apart. It's actually kind of the severity of the impact of breach is that much higher for payment systems than it would be for other systems you might want to secure. My background is CBDC, so I'm kind of thinking as well as the total value of the assets held by a system. I'm also thinking about things like financial stability and trustworthiness of the country, which are, of course, really, really important assets we want to try and protect. So that makes it kind of hard for us to do this kind of risk-based thinking because trying to estimate the impact associated with a single breach is really hard. It's huge, right? So how do we apply that kind of good thinking to a system where the loss expectancy associated with a single breach is very high? And I think there's lots of different ways to approach that. One way that we're looking at the Bank of England is trying to kind of work in collaboration with third-party providers to sort of share that risk a little bit. It's not sort of the only way to do it, but it's one way we've found that's quite effective. It's finding trusted third parties that we can use to kind of help us build our systems and kind of share that responsibility a bit with them. I think the last thing I wanted to mention as well is this idea about looking ahead, so being kind of forward-facing and doing horizon scanning about what's kind of the next threats we'll need to defend our systems against. We'd like our payment systems to stay secure for a long time. We'd like them to be up and running for years to come. And that means we need to think about the security of our payment systems, not just for today, but also 5-10 years down the line, what the threat landscape will look like at that point. Now, obviously, none of us have a crystal ball. We can't kind of accurately predict what that'll be, but we can have a fair approximation about what that'll look like. And I guess the two main threats we are interested in are, I'll start with AI. So generative AI, and specifically the role in generative AI as a way to attack our identity and authentication mechanisms. I think it's sort of becoming very clear that Gen AI is becoming very, really good at creating false identities and credentials, which become harder for us to detect. Obviously, we have ways to detect that, but those detection systems themselves often use AI. So you have this kind of interesting arms race where your attackers are sort of using generative AI to kind of create their exploits or their workarounds, and the defenders use AI to detect those attacks. But then, of course, our attackers will train their methodologies against the same detection system. So you have this kind of arms race where attackers and defenders are both trying to outsmart each other, but really all we do is we just get better AI. I think we can't really necessarily kind of say what the best solution for this might be, but I think a good parallel might be if we look at how malware development has gone over the last sort of 10, 20 years. We've seen the same kind of pattern where malware developers will create their bit of software, detection companies will signature it, and then, okay, well, now your developers will, when they do the development, they'll test it against the same detection systems to see if they can kind of get past the signaturing. And then, of course, your signatures become more complex. Your malware authors, will get into kind of polymorphic malware, whatever. It sort of becomes this arms race. And I guess the reason I draw it out is because although we can't predict how this kind of AI case might conclude, we can maybe draw inspiration from how what's happened with malware, which is, I think it really required thinking from outside of that detection learning loop to kind of resolve it, which was things like, at the very kind of tech end, it's things like control flow integrity. but also things as simple as just having robust backups to protect against ransomware. So I guess that's the first one. The second one to mention, thinking about kind of future threats, is the threats of quantum-enabled attackers. So attackers with access to quantum computers who can kind of use those to undermine the security of our systems. So I guess the reason that's a problem is because a lot of the cryptography that we use today to secure our systems, and specifically our payment systems, is vulnerable to attacks which are enabled by quantum computers. Now, obviously, there's not a commercially viable, cryptographically relevant quantum computer available on the market right now. You can't go and buy one. But we should be thinking about this threat today. And there's a couple of reasons why. The first one is that there's this kind of attacker methodology, which we talk about as harvest now, decrypt later. And what that means is our attackers, of course, can kind of collect encrypted information today with the idea that maybe in a few years' time, they'll get access to the capabilities they need to decrypt that information and use it to, well, sort of advance their objectives. But we can also think about defending our systems against this today, because we actually have the tools that we need to do that available to us right now. So NIST have standardized a set of quantum-resistant algorithms, which they're kind of recommending for use, and they are quite new and sort of haven't been widely tested yet. But there are kind of approaches that we can use to bring those into our systems and defend our payment systems, so that rather than trying to wait for this to be a problem, we can think about it today, so that when a quantum computer becomes available, we're ready for that threat. I guess how do we use those effectively? I guess we sort of follow use these in a kind of a hybrid mode, so using traditional cryptography alongside quantum-resistant cryptography, and we also try to embrace crypto and rapidly reconfigure our cryptography in response to emerging vulnerabilities.
Sure. What immediately jump? Good enough to be ready for today's threats. You also have to be ready for tomorrow's threats. Back to you, Your Excellency. I know you gave quite a comprehensive. In the first round of questions. Given what everybody has said, I see really strengthening the payment systems ecosystem. Anything you want to say additional to what you had said earlier? Thank you.
Thank you once again. Of course, as my colleagues mentioned earlier, cybersecurity is like not for today, as you mentioned also. It's like being, the emerging threats are, as the previous panelists mentioned, the AI, the quantum, and other emerging. It needs to keep up in knowledge and other readiness as well, in technology, process, and everything. But in order to wrap up, I would love to mention that to explain our motto. As INSA, it is a shared responsibility. Because so we always work in collaboration with all the financial sectors, specifically the last 2 decades since the establishment of INSA. We have been contributing a lot in having the financial sectors. I can assure that most of the finance sectors that I have seen, even here, some of them, the employees are from INSA. So they do know how to secure by design, not on the top of the solution. So we have been a lot of contribution in the ecosystem by consultancy, doing a lot of collaboration and conducting projects together. To mention some, we have been conducting last year with National Bank of Ethiopia initiative in assessing the financial payment industry's posture in cybersecurity, and we deliberately work in collaboration with ITSwitch and other financial sectors as well. Why I'm mentioning this, as you all know, one entity is not all the cyber threats, but cyber intelligence, threat intelligence sharing platform is mandatory. So as mentioned earlier, we have our own critical infrastructure protection proclamation that mandated other entities to have their own SOC and sectoral SOC as well, so that we can have a good collaboration and information sharing of what is going on in our environment before things are complicated and aggravated in destroying all the financial sectors. So we have a common platform sharing the threat intelligence, but this intelligence shared, I can mention that through emails and social media as well. But we have to have our own intelligent sharing platform that all the financial sectors, fintechs, and small and medium enterprise also be part of it to share all the threats that's emerging. And for that, we are working in collaboration with sectors. And as INSA, we always safeguard the nation from the external threat, but most of the initiative, as mentioned earlier by Mr. Amara from Commercial Bank, the threats are from internal as well. So always continuous educating and giving awareness and protecting their own infrastructure is a mandate. Security is a shared responsibility. We also share threat intelligence from other sectoral sources, from regional context, Africa CERT, from international CERTs like China, Russia, all CERTs that we are getting information since the threat is in the globe, not only from one entity. So we have to together. That's what I would love to say. Thank you. For the sake of time, I will stop here.
Not sure, and unfortunately, we have to stop there. I've been whispered to in the ear that we need to stop at this moment. Participants can just come directly and ask questions, unfortunately. Yeah. Thank you very much for your responses, and please give a round of applause. Thank you.
Thank you very much. That was a very important panel. I know we could use more time, but for the interest of the rest of the day, that we don't have much time, we had to cut it here, sorry. But thank you so much, and please one round of applause for our moderator. Good. Okay. So since everyone here is a numbers person, we have come to the 75% of our achievement goals or KPI. And then for the remaining 25%, we'll come back after lunch. So we will be back at 14:45. We will be here. And as you've seen me this morning, I have a new device, which is my glass, my cup, and my spoon. And before I get to that point, I hope I'll see you all here. And go for lunch, enjoy, bon appetit, and continue the conversation while eating.
Another issue is on the trust. We've been using those unregulated channels.
Led labor migration. As we know, in our country, remittance is a source of income for millions of households. And it's also growing from time to time. And this is maybe, I can say most of countries are using remittances as engine for their economic growth or financing for their development agendas. When it comes to our country, I complement the challenge that has been discussed during the presentation, and we've been facing as well. So as a Ministry of Labor and the Skills, we train labor workers and also facilitate for their deployment to countries. To do this, we provide trainings for workers first. That means it includes basic soft skill trainings, including digital literacy, financial literacy, that our TVET institutes providing currently. So before the deployment, one thing that I can mention here is about the bilateral agreement that we make between countries before the deployment, before sending workers to destination countries. Nowadays, Ethiopian government has about 6 bilateral. So this digital technology, or I can say LMIs, provides a lot of services, tailored services, including we register, we take their biometrics data, we trace where they are, we approve their contracts, and we also use this as a service provision, efficient service provision for our customers. So this digitalization is also encouraging our workers to come to the regular and safe deployment. So majorly, once you encouraging the regular migration, labor migration, that means directly you are promoting the remittance coming home. So there are a lot of reforms that are being undertaken. And another thing is institutional coordination with financial institutions as well. We are already connected with our financial institutions that closely work with our system. And that system is also being connected with all the key stakeholders that take part in taking forward this system and also enable our workers to smoothly communicate with all service providers and operators.
Fantastic. And that's quite encouraging, Your Excellency. And I'd like to pick up on your last point. Elia, in his presentation, talked about a $1 reduction on cost of remittance is going to unlock millions of dollars for workers, but at the same time, both the senders and recipients. So with that perspective, and from a government-industry relation perspective, what can the ministry and then the public sector from the government side, what can be done to deepen this partnership with fintechs, financial service providers, in order to help continually reduce this cost, thereby meeting this SDG target of keeping it less than 3%?
Exactly. That was one of the challenges that we've been witnessing the past few years, and also currently it exists as well. So the major thing that our ministry is working on is institutional coordination among service providers, fintechs, operators, so that we can have a well-organized system and also to deepen this system as well. So one of the challenges that has been presented during the presentation is cost of transaction. And also we can see the trade for the formal market, we can say as a parallel market is also one of the challenges we can mention. So as a ministry, coordination with key stakeholders is a fundamental. Coordination with financial institutions, with banking sector, with fintechs is very important. And recently we have integrating their system with our ALMI's digital system so that they can get the information that we do have. Information sharing is also very important. Having that information and sharing with those key players is very important. So this, we believe that this will enhance the system and also deepen this digital payment system.
Thank you, Your Excellency. Ambassador Fusum, if I may come to you, from a diaspora relations coordination perspective, your institution faces the front line in terms of dealing with the diaspora, and there are various challenges in terms of sending money back home. So from the issues that your institution deals with, what are the major challenges that we're seeing right now in terms of remittance coming in? And what challenge does the diaspora really highlight as their major obstacle in terms of using this efficiently?
Thank you, Ibrahim. Good afternoon, everyone. First of all, I would like to introduce my institution, Ethiopian Diaspora Service. It's an independent institution under the Ministry of Foreign Affairs. It gives us the opportunity to work with all embassies overseas, 50 of them now. Yes, the challenges the diaspora raise with regards to sending remittances. I think in the last 5 years, on average, $5 billion have been remitted, which is more than $25 billion. That's exactly around 6 GERD-like projects when we see the value. Some of the people in the US, Europe, and some other countries can access. I would like to commend the National Bank for embarking a very important reform last year, which is liberalizing the Forex regime, which enables Forex to float in the market and create, a good, attractive remittance formal flow. Those people that live in the countries I mentioned can easily access the formal channels. And on top of that, the National Bank again introduced Unite.at double platform, which enables remotely to access opening an account and deposit. But when we see the exact figure that remitted through these channels is way, way low. But again, I commend to the National Bank for helping fintech intermediaries to get licensed and facilitate this remittance. All this combined helped a lot. But there are people in the Middle East. Again, I would like to commend my colleague, State Minister Daniel. He just mentioned the formal, regular immigrant labor channel, which has helped a lot. Last year alone, they sent more than 600,000 Ethiopians, immigrant workers, to the Middle East. But there are many others who crossed borders to this destination through informal channels and to South Africa. Close to 90% of them doesn't qualify for KYC or anti-money laundering requirements. That means they cannot access banks. So they look into alternative channels, which are informal channels. And whenever they send money through informal channels, what's the impact? The people in each bank who are required to look into suspicious accounts, they block them. Families who receive these remittances are called by anonymous security, whatever guys, and asked for the source of the money. And they tell their children, whoever send this money, to use their account, to stop sending through such accounts. So this will make them to find another deeper, more informal access. So I challenge everyone, including the National Bank. Recently, the Commercial Bank of Ethiopia, including the president, traveled to South Africa. We facilitated for them. They talked to people in Johannesburg, in Durban, in Abu Dhabi, in Dubai, and they found out the challenge. Now comes, we need to come up with a solution. How can we help them? They want to send money home in a legal way, but they cannot do it because of stringent requirements, KYC and AML requirements. So that's one of the challenges they are facing. Again, interoperability is another challenge. I commend the governor yesterday outlining his vision by 2030 to improve cross-banking or cross-wallet alignment. That's a big step forward. My colleague just recently told me that he wanted to make a payment from one of his accounts to a certain bill, but he was not allowed because that bank cannot cross to the other one. So he had to transfer that money to his own account in another bank so that he can settle the payment. He had to pay a fee for transfer. He told me also that the money has been taken from his transferring account but was not received in his another account. So such kind of minor but cause trust issues also affect. So I think we need to continue strengthening the reforms that are going on and also use us at Ethiopian Diaspora Service. We have focal offices in each region to facilitate diaspora investment, including Bredawa, and 50 embassies all over the world. Thank you.
Thank you, Your Excellency. From a national development and investment mobilization perspective, right? What are some of the creative ways that diaspora remittances could actually be channeled into national development plans, like within infrastructure, healthcare, so that we can ensure diaspora voices are also properly reflected and heard?
Thank you. The Grand Renaissance Dam bond that was issued, a decade ago is the best example. I think the only problem it may have, is it's a paper-based. Yes, the GERD has been completed. That's, monumental project. Ethiopians government in the country and the diaspora, without any foreign source, managed to raise $5 billion and built the biggest dam in Africa, and is completed. So we have achieved this. We can do also, still we are saying 10% remittances remaining, and we have continued to raise, and also, recently, in the last 6 months alone, we raised $2.6 million worth through sale of GERD bond. And what I'm asking now, I'm challenging, of course, is to transfer this paper, they call it dematerialize, into digital means, which enables the bondholder to liquidate it through secondary market instantly, which also creates confidence and enables the public to learn how to transact on bond market. ESX is already launched. That's a wonderful opportunity. And this is one of them. Also, it can be, why don't we transact securities. At the moment, only banks are, I think, transacting. If the amount is reduced to affordable level, then so many diaspora, they can access it through US dollars. That's going to be a risk-free, a very attractive instrument to attract remittances. And we can continue on different projects as well. Thank you.
Thank you, Your Excellency. I'd like to change the focus now and come to you, Ato Teferi, as the CEO of the Oromia Bank. And as you hear it from Elias' presentation and from Ministry of Labor, as well as from the diaspora community, we're talking about cost as the major driver and challenge, and then various related challenges in terms of advancing remittance. Now, from a banking perspective, what are the frontline challenges that you see in terms of senders and recipients of remittance are currently facing? And how do we continually focus or invest in terms of building trust so that they could use the formal, or Elia calls it, the regulated channel of remittance? And there's a curveball in there I want to introduce. How do you foresee the affordability of services at this point in time in terms of sending and receiving money?
Thank you very much. Thank you for having me. Before all, I would like to congratulate the organizers of this conference, basically the National Bank of Ethiopia, supported by ITSwitch. We need many of such conversations in the process of building digital economy. Lack of well-integrated and robust digital platform to support this remittance service across the globe. You know, all private banks may try their part in a piecemeal to support digital remittance, but it is not successful because of some integration and the level of the platforms in terms of interoperability and seamlessness. The other challenge we observe is digital illiteracy. Most of the, including the MTOs, the senders and the beneficiaries are not as such digitally literated. They just throw away the challenge of digital literacy to the mercy of the MTOs and the bank. So this is one of the challenges, I think. The other is lack of aligned attractive incentives, like a life change in their life challenges. So these are the potential challenges that we are observing as a banking community. So there are resolutions that are well undergoing since the FX reform we have just underwent as a nation before a year and 6 months ago. We have been in conversation with the MTOs, with the community abroad, and with the intervention of the National Bank of Ethiopia and law enforcement agencies. So these conversations has brought some sort of awareness creation among these stakeholders. And as a banking community, there are shares that we are taking and we are working on to improve, like offering robust, interoperable digital platforms to support this service in integration and in collaboration with MTOs, the National Bank of Ethiopia, local fintechs, and our national payment gateway, ITSwitch. The other initiatives we are just discharging is aligning these beneficiaries with some life-changing packages like digital financing alternative, especially for those who are underprivileged in the financial inclusion because of lack of collateral, lack of goodwill, and the like. The other opportunity that the reform is offering is, you know, after the floating, the dollar value in terms of birr has grown exponentially now. So we are just offering them a very competitive exchange rate, which is closer to the parallel market. So that is another incentive we are working on. The other initiative is putting trust on local or homegrown fintechs to collaborate with and enrich our digital platforms that support these remittances. So, in general, we are really going well as a nation, as well as a banking sector community. There are also other areas that need serious intervention from every stakeholder, from the diaspora at the abroad, MTOs, law enforcement agencies, the National Bank of Ethiopia, local fintechs, payment operators, including ITSwitch. So if we resolve all the bottlenecks in collaboration, I think we will be in a position to grab all the benefits of this potential remittance to build our national economy.
Thank you, Ato Teferi. And I'm glad you zoomed in on collaboration and partnership. I'd like to pick on what you said about literacy, because continually it's coming up as one of the challenges, literacy across the board, both from senders and receivers' perspective. What should financial institutions, banks for that matter, fintechs and service providers do this gap of literacy from receivers and senders' perspective?
Yeah, it is a nice question. First of all, this digital literacy can be resolved not only by the intervention of commercial banks, but also in collaboration, as we just began with, basically with the National Bank of Ethiopia and the banking community. As a banking community, we have been in touch with the diaspora in a team or individually, as just mentioned by Ambassador Fitsum. Banks are approaching this diaspora community as well as MTOs abroad, especially to come from the dilemma between the parallel market and the formal market. They have to contribute their part while Ethiopia is rising in many fronts. So we have to build on those who are on the right track and bring the other who are playing one. Second, we have to aware our community at large, which is abroad, to just come back to the formal market and it by just throwing away the risk of even, especially now, the National Bank is taking this issue seriously, and in collaboration with law enforcement agencies, the parties that are involving in remittance through parallel market are about to pay a cost. This cost will be exponential when it comes to individual household beneficiaries. You see, not only blocking their account, but to the extent of confiscating the transfer, the money which is transferred in this manner. So we can constructively take this, all the stakeholders, to the right track by aligning these remittance, digital remittances, to some life-changing incentives if they follow this right track. As a case in point, I can mention this, the package which is under offer by my bank. We do have some digital financing platform which especially focuses this group of community which is dependent on such remittances and which can begin some startup business by making use of, by saving this money. Even apart from that, there is a notion in Ethiopia, financing is fully concentrated on a collateral based banking. So in order to break out of this notion, we do have a package which exclusively focuses on those who are underprivileged for financing: youth, women, and farmers. These are the most underprivileged part of our community because of lack of collateral and some goodwill. So this platform aligns the beneficiaries of such remittances to just make use of this collateral-free financing for some startup business and then gradually graduate to medium and small businesses. The numbers are really amazing and exponential. It has been only 6 months since we launched this product, which exclusively focuses financing women, farmers, and youth for some small-scale businesses. So during only these 6 months of operation, we attracted and financed 94,000 startup business owners. And it is a lot for the Ethiopian financial inclusion as well. Of course, the per head borrowing is so small. Though it is so small, we addressed and included by disbursing about 415 million birr to these 94,000 borrowers, startup borrowers. When we compare this with our conventional borrowers, we just recruited so far within about 17 years. It is about 14 times of what we have supported during our journey of 17 years. So surely if we move this way and others also engage on such incentives to ensure our financial inclusion, we are showing them the benefits out of just operating in the formal market.
Fantastic, and congratulations on those numbers. And it's quite encouraging to see that. Elia, I'm going to come to you. You sit from a global lens perspective. And as you can see, our ecosystem is shifting. We've just recently launched our Digital 2030 strategy at national level. We're gearing up to launch our national data strategy. ITSwitch has done a wonderful job in putting together an inclusive payment system. The National Bank has just launched the revised digital payment strategy. So our dynamics is shifting. Now, what do we have as Ethiopia? What do we have to learn from countries in other parts of the world in terms of advancing our digitization effort for improving remittance services?
Thank you so much. A good question. And I really touched a bit on it when I was doing the presentation. So there's a lot to learn from other countries. I have an example of Bangladesh, which I mentioned, where they had a very coordinated effort in terms of making sure that all their employees, especially those who are going abroad, because they have programs of sending people abroad, their salaries are paid. So they organize them before they leave, make sure that either they have bank account or mobile money account, and make sure that the salaries goes through the digital channels. And if we digitalize government payments, this takes us to the second issue of the government payments, P to government, government to people. If we digitalize that, it's one of the aspects which moves digitalization, not only of the domestic, but also for the cross-border. So one of the big aspects I think we need to learn as Ethiopia is how do we capitalize on that, digitalize all the recipients. And then there is the issue of aligning the government, the efforts across. I think it's been touched on collaboration. Have coordinated efforts between the public sector and the private sector. And here we are talking about the banks, the MTOs, the fintechs, and the diaspora community. have coordinated efforts, because these corridors, some of these corridors differ. A corridor in for South Africa is a bit different from the UAE corridor. It could be different from US corridor, corridors for flow of remittance to Ethiopia. So if we work together with the diasporas, they have different issues to solve when it comes to remittances. For instance, for South Africa, the big issue could be, I suspect, the ID, the identification, the KYC, right? So if, as a country, we have this national ID, how do we, use that to support our brothers and sisters in South Africa? There's, if there's coordinated efforts, there are fintechs which are coming up with web-based channels. So the issue is KYC. If the issue is KYC, this person has a national ID. He's living in South Africa, but he can log in to a digital wallet and do the remittances. So collaborative efforts combined with digital technologies can solve some of these problems. And then all that comes to the trust. The countries we have been experiencing, using, I normally call them unregulated channels, excuse me, as opposed to informal. Because these unregulated, sometimes they're more efficient than the regulated. Ask me why. Because if I go to a person and give an example of South Africa, and has a connection here in Addis, and then that person instantly tell me, ask you Mr. ABCD and get the money, that's efficient. But the same channel, former channel, go to a bank, by then, before the exchange rate, it will be like you are losing almost 50% of what you are sending because of the costs. Then people normally trusted those unregulated channels. Now, how do we move them from that? Because the issues have been resolved to a great extent with the reforms which are going on in the country. So now, how do we work on those and change those kind of mindset and use and trust now the digital channels? Right? So then, again, we go back to the coordinated efforts on doing that. But last but not least is the issue of proportionality. The issues of KYC, sometimes it's just being a tiered KYC. Because when we say maybe one size fits all, a person sending $50 be subjected to same a customer for a person sending $20,000 is purely unfair. So how do we use, as I gave an example of Ghana, where they have those tiered KYC, which are risk-based, not only on know your customer, but also on who should be doing remittance businesses. Let's focus on risk-based approach. There could be fintechs which does not really have to go all through the requirements, including the capital requirements and the reporting, all that, as a payment instrument issuers, but it can provide services that are, they are aligned with their risk they are assuming, if that is included in the policies and regulations of the country. Thank you so much.
Thank you, Elia. I want to double down on this issue of collaboration, and if we look at it from in terms of interoperability perspective, what seems to be a very natural thing to attain between financial service providers, right? What are the mechanisms to attain interoperability between banks, fintechs, and mobile service providers in a more practical manner? What good examples can we look at?
When we talk of interoperability, is again, it's not one aspect, it's a combination of aspects. One of the key ingredients of interoperability is the regulatory space. Is it mandated? Right? So from the regulatory point of view, how do you see the interoperability? The second one is on the technical aspects, the standards. Do we have standards which cut across. Thankful to Ethiopia, they've adapted like ICO, the standardized, technical aspect. So that is another aspect. But again, the issue of incentives, which goes hand in hand with the interoperability. Are there any commercial incentives for players, for the users to use? Are there, they could be commercial, but as well as physical. How is the government, or revenue authority looking at interoperability? There are countries which are going to an extent of taxing flow of remittances through the formal channels because the numbers are going up, and then it's like so attractive. If you take, say, 1%, it's detrimental to the interoperability. And again, going back to is it risk-based in terms of those players who are joining? Are they subjected, or are they subjected to risk they are assuming, based on the risk they are assuming?
Eli, I'm going to put you on the spot and ask you, is there countries that you could spot on top of your mind that are potentially good reference point for Ethiopia in terms of interoperability?
Yes, could be Philippines. I think we need to, as a country, Ethiopia need to do something on risk-based approach. So Ghana could be a very good example of that. On the digital edge, I think Bangladesh could be an example. Of course, on the interoperability, we can also learn from our neighbors like Kenya in terms of our East African payment system, which now is seamless transfers interoperability when it comes to mobile money. So using my phone here, from Tanzania, I can send money to Uganda, Kenya, seamlessly at a very low cost. And I think those are some of the aspects we can learn. Maybe take advantage that I'm having the mic. Again, going back to looking at the corridor-wise, aspect on how we can capitalize on that. Thank you so much.
Fantastic. Thank you. Thank you, Elia. I know I'm being conscious of time, so allow me to present one final shot of questions to Your Excellencies and Your Excellency Ato Daniel. I would like to come to you. I mean, beyond remittances, if we talk in terms of economic empowerment of migrant workers, what is the ministry doing right now or could potentially do to actually advance or improve the financial literacy, the savings behavior, or else long-term economic empowerment of migrant workers?
Thank you so much. As a ministry, we've been undertaking different reforms regarding this. Actually, currently we do have more than 600 training institutes that are providing trainings. These institutes provide trainings including the financial and digital literacy. We are now connected with the workers can closely work with the bankers, and also the workers or labor have their own business plan with bankers so that they can be also included and also get financial, I can say, credit and different schemes. So we are closely working with financial institutions and also encourage banks also to closely work with training institutes. Actually, it's where we start providing pre-departure orientations, including the trainings. Investing on those TVET institutions is very important for the labor migration because this remittance is not only transaction. We believe that it's outcome of human mobility. So we need to invest on those institutions so that the workers have good knowledge about this digital payment and also address the challenge that we have been discussing of. And making accessibility is also very important. We suggest, we encourage that. Apart all the capacity building and awareness creation is very important and fundamental, and we are aggressively working on the awareness creation.
Fantastic, thank you. Ambassador Fursum, if I may pose the last question to you, from a Ethiopian diaspora service perspective, what kind of further collaborations does your institution expect from the ecosystem, and particularly, what do you expect from the National Bank and financial institutions in terms of helping you advance this relationship with the diaspora?
Thank you. Given the challenges, I think it's possible to come up with solution, and I strongly believe if the National Bank takes the lead to coordinate all stakeholders, including the Ministry of Labor and the Skill, and Ethio Telecom, and all other banks who are working on this, to have kind of regular session to evaluate and address the challenge. This is a very important platform, but it happens once a year, and it doesn't focus on, operational level discussions. So I strongly encourage this to happen. The other one is already Ethio Telecom, through its Telebur, has reached out to some international, like Western Union, Visa, Tok, Send, and the like. And they are now negotiating with a local wallet in UAE to facilitate this kind of. So if this is happening through National Bank, through their counterparts in these corridors, in Gulf corridors in South Africa, I believe will be more faster and will be more effective. So far Ethio Telecom has received through this channel $30 million, which is encouraging, and it shows that it's possible. Thank you.
Thank you. Gentlemen, as you've heard it, this is an evolving topic. Our interest today through this panel was to shed light mainly on the challenge, but at the same time, as you've heard, on the key efforts that are being done by the different institutions operating in the ecosystem. There's a lot to be explored, but at the same time, there's a lot to be encouraged as well. So I'd like to thank my panel for me. This has been a very wonderful session, and I would like to close it down here. Thank you so much.
Thank you so much, Ibro, a good old friend. Okay, let's have a group picture of the panelists. Thank you. It was a great session. Now we got to the highlight of, well, I can't say the highlight, let me just say the cherry on top of the cake session. Before that, let's play one video. That's NDPS 2.0 video, and we'll be back for the fireside chat.
From 2021 to 2024, Ethiopia's first national digital payment strategy reshaped finance. Mobile money grew from 12 to nearly 140 million accounts. Mobile banking rose from 9 to 54 million, and transactions expanded by more than 150% annually. ETHSwitch real-time transfers, the national payment gateway, and 130-plus digitized services reached 1.5 million households. While digital payments have grown, there is still room to expand usage, increase merchant acceptance, and ensure access for all communities. The National Digital Payment Strategy 2.0 aims to strengthen adoption, trust, and inclusivity. The 2026 to 2030 strategy builds on this progress and aligns with national priorities such as the Homegrown Economic Reform Agenda, Digital Ethiopia 2030, the National Financial Inclusion Strategy, and FIDA, supporting a trusted, inclusive, and fully connected digital economy.
ከ2026 እስከ 2030 የሚቆየው የኢትዮጵያ ብሔራዊ ዲጂታል ክፍያ ስትራቴጂ አንደኛ ኢንክሉሲቭ፣ ሁለተኛ ትረስትድ፣ ሶስተኛ ደግሞ ኢንቲግሬትድ፣ አራተኛ ኢኖቬቲቭ የሆነ ኢኮሲስተም መፍጠር ነው። የኢትዮጵያ የክፍያ ስርዓትን ለማሻሻል በዚህ ስትራቴጂ አማካኝነት 6 ፒላሮችን እንጠቀማለን። የመጀመሪያው የህዝብ መሰረተ ልማቶችን መገንባት ነው። ሁለተኛ ደግሞ ክፍተት ያለባቸውን ናሮ የሆኑትን አካባቢዎች ጋፖችን አይደንቲፋይ አድርገን በመዝጋት ነው። ሶስተኛው አሁን ያሉትን የዲጂታል አገልግሎቶች ማላቅና ከፍ በማድረግ ነው። አራተኛ ካፓሲቲን ቢልድ በማድረግ፣ አምስተኛ ሬዚሊየንት በቀላሉ ሸብረክ የማይል ሲስተም በመፍጠር ነው። ስድስተኛው ኢኖቬቲቭ የሆነ ሲስተም በመፍጠር ነው።
Reform participants, while directives ensured seamless connectivity. The National Digital Payment Strategy from 2026 to 2030 strengthens security, stability, and consumer protection as adoption deepens.
በ2026 መጨረሻ ላይ በኢትዮጵያ ውስጥ የሚከናወኑ የትኛውም የዲጂታል ክፍያ በኢትዮጵያ ብሔራዊ ባንክ በሚገነባው የዲጂታል ክፍያ ሞኒተሪንግ ሲስተም ውስጥ በሙሉ ያልፋሉ። ይህ ማለት አንድ ሰው ክፍያ ሲከፍል ደህንነቱ የተጠበቀ መሆኑን የምናረጋግጥበት ማዕከል ይገነባል በኢትዮጵያ ብሔራዊ ባንክ ውስጥ ማለት ነው። የኢትዮጵያ ብሔራዊ ባንክ 3 ነገሮችን ያደርጋል በዚህ ስትራቴጂ። አንደኛ ሰዎች በዲጂታል አይዲያቸው መሰረት እንዲታወቁ ክፍያቸውን ሲከፍሉ ሲመዘገቡ በሙሉ። ሁለተኛ ዩኒፋይድ የሆነ ክፍያን ስርዓት እንዲጠቀሙ ማስቻል። ሶስተኛ ነገር ደግሞ እንዲሁ አጠቃላይ ዩኒፋይድ የሆነ የመረጃ ቅብብሎችን ሶስቱን በማገናኘት ማዕከላዊ የሆነ የመረጃ ስርዓትን በማገናኘት ይሄ ስነ ምህዳር ደህንነቱ የተጠበቀ ተአማኒ እንዲሆን በ2030 ላይ የኢትዮጵያ ብሔራዊ ባንክ ያንን ይተገብራል ማለት ነው።
ETHSwitch powers real-time transfers through Ethiopia's instant payment system.
ኢትስዊች በኢትዮጵያ እንከን የለሽና ፈጣን ክፍያዎች እንዲከናወኑ ብዙ ተግባራትን እየፈጸመ ነው። አንዱ ያመጣ ነው ፈጣን የክፍያ ስርዓትን መተግበር ነው። ኢቴች የኪውአር ኢትስዊች ያመጣው የኪውአር ስታንዳርድ ነው። በኪውአር በጣም ቀልጣፋ ነው። ነጋዴዎቹ ከፍተኛ ነጋዴ የሚሆን ዝቅተኛው ነጋዴ የሚሆን ጉልት ያለችም ሊስትሮም ወይም ትልቅ ብዙ ብራንቾች አሉት ያ ምን ማድረግ ይችላል? ኪውአሩን አንድ ኪውአር አስቀምጦ ክፍያዎችን መቀበል ይችላል። ሁሉም አገልግሎት ሰጪዎች ምርትና አገልግሎታቸውን ለሚፈልግ በሙሉ ፈጣን እንከን የለሽ ክፍያ ስርዓት እንዲፈጸምለት ለሁሉም የፋይናንስ ተቋማት ለሁሉም የመንግስትም የግልም የንግዶችም ማህበረሰብ እየሰራ ይገኛል።
By 2030, Ethiopia aims to narrow the rural-urban divide from 24% to 8% and reduce the gender gap to less than 3%. This progress positions the country as a continental leader in digital financial inclusion.
Ethiopia's digital payments journey has been driven not just by technology, but by leadership. And Ethiopia is becoming a case study of how to build an inclusive digital public infrastructure that truly works for its people. Our partnership with the Central Bank of Ethiopia is really aimed at accelerating gender inclusion by placing women at the center of the digital economy. When women have digital payment tools in their hands, their economic voice becomes stronger, and we are seeing it unfolding across regions in Africa.
The National Digital Payment Strategy from 2026 to 2030 is more than a payment framework. It is the foundation of Ethiopia's digital economy, enabling citizens, businesses, and government through trust, innovation, and opportunity.
We are. to have a very insightful conversation. And we call that a fireside chat. Here we are to have that fireside chat, and I will invite our moderator, Sunit Zaru, Senior Advisor at the Tony Blair Institute, to moderate this fireside chat. And the floor is all yours, Sunit. All right. And now I am given the mandate to invite His Excellency. So please help me in welcoming His Excellency Dr. Eyob Takalling, Governor of the National Bank of Ethiopia, to have this fireside chat.
Hello. So first I want to say thank you so much for the opportunity. As Mehdi kindly said, my name is Sunit Zaru. I'm a senior advisor at the Tony Blair Institute, and I'm really honored to be here to conduct this fireside chat with His Excellency Governor Eyob Takalling. So, Governor, you have had a very impressive and long career in government. Most of us will probably know you from your former role as the State Minister at the Ministry of Finance, but you have also had roles as head of the National Planning Commission. You have been a leader in the public-private dialogue, and while some of us may know, you have been a board member at the National Bank of Ethiopia. The role of governor, you've only been in it for 3 months. First of all, did you envisage yourself always as having a career in government, or when you were a fresh graduate, did you think of yourself as doing something else?
Thank you, Sunit. 3 months, you said? It looked a bit longer. Or shorter, depending on how you see it. Yeah, that's a very interesting question. It took me back to my college days. So, I mean, those who were with me in college probably would say there was some desire for public service, for leadership, even back then. Probably the amount of time I've spent on extracurricular activities, leading the student council, the economists club, theater club, and so on, was probably more or proportional to the focus on basic curricular activities. So I had this thing, you could call it a calling. My wife calls it a virus. She says, I have acquired this public service virus. I don't want to get healed. So I love what I do. But did I think that I would have a very unique chance of leading the three critical macro institutions, said planning, finance, and our central bank? Probably not. But I think being driven, having a passion is absolutely important. So for those young students listening, I would say, you could go far. So make sure you take full advantage of your education, what you can do in life. But also, I must say this, I don't take this lightly. This is an honor. Serving your people, serving this beautiful, wonderful country, honestly, is a big honor. So I take it with that sense of responsibility, sense of honor. But coming back to the question, I think I had a thing for it, but the trust the Ethiopian public placed on me is just an honor.
Okay.
Thank you.
Yeah, that deserves a round of applause. Thank you. given that you knew you wanted to be in public service, but probably had not anticipated to have reached this level, what do you think your 21-year-old self would say if he could see you now?
I'd say, wow, you've got into places. But I would look back and say to that Eob, or to others like him, you can be what I tell my daughter always. You can be what you really want to be, but you need to have discipline, hard work, commitment, dedication, and a sense of humility. You should take this as humility. But I should say kudos to that Eob. I think, as I said, it's a big honor. Yeah.
Excellent. I think looking backwards a little bit, since the launch of the first digital payments strategy in 2021, there have been huge leaps. Several of the panels and the discussions and the speakers have given some real kind of detail and flavor as to how much Ethiopia has changed. And definitely, including myself, we are all carrying a lot less cash nowadays. We've learned from the strategy some really impressive statistics. The mobile money accounts grew from 2 million in 2020 to nearly 140 million in 2025. Mobile banking accounts increased from 9.1 million to 54 million in the same period. More choice, more competition for citizens. But from your personal perspective, what would you say have been the biggest wins? And what are some of the biggest lessons that you want to see taken forward?
The biggest wins, Senator, you've just laid it out. I mean, it's not only you. If I could ask the audience, how many of you have significant amount of cash in your pockets, in your wallets? I would not be surprised if only a few people are carrying cash these days. So that success, the pace at which Ethiopians have adapted to digitization, digital transformation is astounding. I mean, to add the statistics you've listed out, we have 18.5 trillion digital transactions now, right? Big. That is over 50 billion per day, right? And probably 2.1 billion per hour. So, the previous funnel probably took an hour. That means 2.1 billion was being transacted digitally, doing this in cash. So yeah, that is what is a biggest success. But the whole idea of moving government into digital transaction, digital service is a big leap forward. Most services are now digital. At the Ministry of Finance, for instance, 98% of transactions are done digitally. Imagine this is the biggest spender in the economy. So that we've managed to bring government to this as well is a big success. But equally, that we've laid a strong foundation for digital infrastructure. Discussion we've had the last couple of days here tells you that we've come far from where we were. Interoperability, for instance. I know this was such a foreign notion just a few years back. Now that we have achieved significant success, we're looking at the last mile and saying, instant payment should come. But banks were in silo, like just a few years back. I see the CEO of ITSwitch here, and you are probably manually, I'm helping people imagine the difficulty of lack of interoperability, but see how far we have come. So really, I think we should pause and say, we've done well. But what is the lesson, I want us to take out? One, that a well thought out and carefully executed with strict discipline, strategy works. That's what it shows. This is not accidental, right? What we've achieved now, happened because there is serious approach to it, the government at the center of it, designing policy and executing it, but partnering with the private sector, partnering with critical stakeholders. And that if you give a certain strategy, serious thought and execute it with strict discipline, you can go far. That's the kind of lesson I take, because this is important. It gives us encouragement that we can also get to the goals that we've set for ourselves in 4 or 5 years down the road. But the other thing I want us to take us with us is we should not be complacent, right? I mean, it's easy to say, look, we've done well. 1.2 has delivered. We can shake hands and go home. But we all know that there is a lot of work that needs to be done. As was discussed in the previous panel, the issue of trust, consumer trust, confidence, issues of security, issues of divide, urban, rural, women, gender divides, and we need to bridge those. And also, we should think beyond payment, right? So innovation beyond payment is something that we should focus on. So those critical themes laid out in Digital Strategy 2.0 that we're asking everyone to download today, I think show that there is a lot of work that needs to be. So the overall message is, yes, we've come far, but we have a long way to go, and we should not be complacent.
Thank you for that. Now that you've brought us onto our kind of main agenda, which is the current 2026 to 2030 digital payment strategy, once everyone downloads it, they will see that there is a really helpful strategic framework which uses the acronym BRIDGE. And I think it would be helpful to give everybody a flavor of the strategy and also to guide our discussion to kind of be inspired by that framework of BRIDGE. So let's begin with B. B is building a robust and interoperable digital public infrastructure. We had a dedicated panel yesterday discussing DPI, and it is a critical element in order to deliver any part of the strategy. It would be great if you could kind of set the scene from your view in terms of what NBE is doing to help address digital infrastructure gaps and make sure that the current strategy is set for success.
Good. I mean, NBE specific, I'll come to it, but I think we should also see the whole of government approach, because I strongly believe digital public infrastructure is a public good. If it's a public good, then the architect and investor to this public good should be the government. So in that sense, I think the first thing I think we've done right is to have the right policies and strategies. 1.0, 2.0, but not just the digital payment, but the broader Digital Ethiopia strategy, as you know. In the second version in particular, there is specific focus about digital public infrastructure, where, how, showing the gaps. And there was significant investment that went into it over the years. If we want every transaction should properly be monitored so that there is proper consumer confidence, then we need to create that capability at the central bank level, but we should also drive set direction so that key stakeholders, in this case particularly the financial sector, should invest, should put more money into it. So I think we've done quite well in creating that, but I don't think our job is finished. We need to do more. The whole idea of data sovereignty is an issue now. Should you all go to clouds? What kind of physical infrastructure should we have? All this interoperability issue requires investment. As we have advanced into treasury bill market, for instance, we've made significant investment on CSD which platform for investment banking, for retail and whole government bond and treasury bill, corporate bond selling activities, which would deepen the financial sector in general. So a central bank, we can't just put out a good policy in place, but we should also put our money where our mouth is, invest, but also set the direction so that others can follow through. So I think if you look at where we are now, we are halfway there. We've made good investment in many aspects, but you should also finish there. That's why in 2.0, you see critical areas of focus, including on digital public infrastructure.
You touched on sovereignty there, which is, I think, an ongoing issue for Ethiopia, but also for many countries, given that the nature of digital transformation is cross-border, and there are lots of benefits, economic benefits and other benefits that come from that. And we have the Africa Continental Free Trade Agreement Secretary General speak also at this conference. I'm curious, though, there seems to be a tension between wanting to utilize digital tools, have interoperability, be a player in a global market, but also maintain appropriate levels of data sovereignty. It would be interesting to hear your view in terms of like, what is the balancing act between those two?
It's a tough one, I tell you. It's something that nations are grappling with every day. But really, from Ethiopia's point of view, we strongly believe that we grow, prosper together with our neighboring countries. The importance of regional integration, economic integration is absolutely at the heart of our foreign policy. So I really agree with most of what Secretary General was saying in that fireside chat, but it also shows, especially on the financial sector side, more work needs to be done. Issues of currency convertibility has yet to be discussed. We've talked about customs harmonization and so on. Even there, we see that countries are now at times, going one step behind after taking two steps ahead. So creating that confidence is absolutely important. So one, harmonizing our laws, our procedures is absolutely critical. But in a nation, in a digital, issues of central bank digital currency, how do probably ideas of easily convertible common currencies a little bit too early. But for us to see meaningful regional integration, the financial integration aspect has also to be strengthened. So I would say central banks in these countries have a lot of work to do, sit down, discuss, strategize, prioritize, so that what our leaders have talked about, regional integration, has to be backed up with financial integration.
Okay. Thank you. I think we can move on to the second letter, which is R. R is for reaching all Ethiopians, in particular addressing inclusion gaps around gender, geography, youth, people with disabilities. Inclusion is a major theme of the strategy. It was reflected in the original strategy, and it is further underscored in the 2.0 strategy. Given that the National Bank, though, is largely an organization that engages at an institutional level rather than sort of directly with these communities, what do you see as the role of the National Bank in proactively addressing these inclusion gaps?
You're right. We are a regulator, but I'll come back to it. But we can also sometimes actively participate. Have you seen Tsaga? Tsaga is an investment portal. It's an investment portal that we hope would democratize the whole access to capital market issue. Essentially what it does is it offers opportunity for participation at retail level for people to buy treasury bills. So, for instance, if you want to buy treasury bill from the Ethiopian government, you can really use this platform and participate. Initially, this was only limited to few financial institutions, right? This was developed by the central bank itself, by National Bank of Ethiopia. It's our portal. So just to say, sometimes we also act directly, but the essence of your question is right. I mean, we ensure inclusion through setting the direction. Directionality is what we expect from the regulator, right? So the policies that we enact, look what we are doing here. I mean, we are highlighting the gap on inclusion, right? Not just by developing strategy, but by creating awareness about that strategy, by calling on all stakeholders to see the matter actively, and also by, you know, as we continue to do, by probably incentivizing some, you know, specific products, financial inclusion focused products on gender side, on rural urban side. For instance, NAFIR, this is a big initiative for agricultural finance, would have in it, you know, 2-3 components. One is probably a certain aspect of risk guarantee, so that we can really include those farmers and pastoralists into the financial space. And that is designed and implemented by central bank with key stakeholders, including Ministry of Agriculture. So the central bank plays a very important role. But also, it's good to note, I'll finish with this, your question showed that it's not a job of a single party. This is not something that central bank can do alone. It's not something that banks can do alone as well. It requires collaborative effort. It requires concerted effort from all stakeholders. That is why we have a strategy, and clearly laid out pillars that can really rally the entire stakeholder behind, so that we can really ensure financial inclusion. But I'm encouraged by the results. You know, in the previous panel, 14%, you know, the 14x, right? Not 40%, 14x. You know, these kind of numbers are becoming quite common. And there are, you know, in some banks you'll see small order lending, you know, thousands of them every day, like as you sit in minutes. Or, you know, on the digital space, we used to talk always about 300,000 borrowers only in the financial sector for years, but with digital intervention, we have millions now, thanks to our innovators, to the fintech innovators, to our payment service providers, to telecom operators. That divide is narrowing. All is possible because the central bank was able to set the right tone in the market.
Okay, thank you. I is about increasing widespread adoption and deepening usage. If we take that to the absolute extreme, it would be a cashless society. Do you envisage a cashless Ethiopia, or even a world where traditional currencies are no more?
Look, we should look at it in a balanced way. Absolutely, digital inclusion, digital drive is important. But does that mean we are moving into a cashless society overnight? I don't think so, honestly. Probably we should anticipate more of a dual structure where digital transactions will deepen and grow significantly, but there will also be a niche market for cash transactions. And I mean, in our case, we have a significant amount of informal economy, rural sector, and so on. So I would expect that transactions would continue. But even globally, I think this notion of no currency at all, probably a little bit far-fetched. I think even because of sovereignty issues, I would expect nations to hang on to this national currency thing. I mean, it could take different forms. For instance, central banks now have to understand what central bank digital currencies are, because that currency might take a digital form, but still that
level of digital literacy panel on the role of AI here earlier today. From a big picture on AI for Ethiopia, where do you sit on the spectrum that is sort of at one end a kind of dystopian fear that we're going to be jobless, and it's more optimistic, we're working towards a utopia where we only do the work that we use on like for Ethiopia?
Yeah, it's a difficult one. Yeah, but I tell you, I think this extreme dystopia utopia notion is a bit well, not far-fetched, not far-fetched, a bit, me use that word. Utopia. The idea is there would be significant productivity gain from there will be universal basic income, work in an area that they don't want to you do, because there is enough wealth that is created. I mean, it's, there was this course, you're a bit younger, so I don't know whether you have studied Hebrew science. That Solomon would where a teacher would come and talk about communism, and he would say, look, I recall, he would say, this kid, you imagine as you come out of here, you see a bike, you hop on it, you go. If you see you don't need to pay, but you work. The idea is you work per your ability and you live off as you wish. But I don't think that is really realistic, right? I mean, think a society that no longer has this scarce mentality, or we have a very different social contract, any social contract, and then a capacity to generate excessive wealth, so that we all have our universal basic income. I think that is a bit far off. So I don't think AI is going to do that. And as you've rightly described, I leave it at that. And dystopia, that this notion, that this fear, that AI is going to destroy all jobs, it's a doomsday, it's the end of the world. I think that's also completely unrealistic. I mean, look at the structure of our economy. Right? It's largely informal, right? I mean, for AI to take all jobs, what we're saying is all jobs are routine, automatable. I mean, you can automate these jobs, structures, so that a machine can do it all. This agrarian economy, where you have a number of informal activities, trading and so on, would AI take all these jobs? No, not really. In fact, AI actually, the challenge we have is lack of jobs. We have a number of educated young people that don't have jobs, that are asking for jobs. So actually, there might be a demographic dividend, because we are, as you know, we are training over 5 million people. Ethiopia Can Code initiative, 5 million of them are coding, which means with some AI capability, we can create well-paying, better jobs. So maybe to go back to your spectrum, I mean, definitely you see that I'm not on that dystopia side. I'm not on this end, but I think there is this analogy, I don't remember where I read, in describing AI. Think of AI as a high-powered self-driven tractor brought into the Ethiopian farmlands, that while farmers are plowing with oxen. So if we use it well, it could enhance significant productivity. But if we don't, it can go off the cliff, or it can sit down there and rest, break down and sit with no use. I think AI can be a tool that augments our capabilities in agriculture. Think of precision agriculture. If you know which plot of land can be more productive, what amount of water you need to give it, you're not displacing the farmers. Actually, you are supporting the farmers so that they can be more productive. Education, AI tutors. It means, if we have an AI tutor, Senate is more intelligent than EOP, then that means it's catered to our need. In government services, we can enhance for those services that can be, done routinely and done in automation. You can enhance public service delivery, create more efficiency in bureaucracy. So yes, I'm more optimistic about AI, and I see it as an augmenting tool that could, if you use it properly, again, if. So I'm not just a mere utopianist, but what we decide today, I strongly believe really matters. If, as our Prime Minister often says, if we seize the moment and make the right decision about AI now in the next 5-10 years, it should be a tool that will help us catch up with the world and take advantage of the fifth industrial revolution. The 4 revolutions have gone and we're spectators on the side, but now we could be active participants.
Thank you. I guess continuing a little bit on the theme of AI and positive applications, the strategy commits to utilizing AI to tackle fraud, to invest more in cybersecurity. We also had a session today on the importance of cybersecurity, particularly in terms of increased attacks towards the Ethiopian infrastructure, but also through human error, the kind of unintended consequences of pressing a button. It would be good to hear your sort of reflection on where Ethiopia is at in terms of mitigating these cybersecurity attacks, especially given that you are the governor of the National Bank and regulating the banking sector, which is a natural target in many ways. What's your view in terms of how Ethiopia is doing and where things are going in terms of ensuring security and trust?
Very critical agenda, I tell you. Well, there are things that we've done right? We have a dedicated agency, INSA, as you know, has a full mandate, to deal with cybersecurity issues. And we have developed a strategy as a nation. So there is understanding of the threat that comes with it and the importance of making yourself equipped well, to withstand this potential threat. So over the years, I think in terms of capacity building, a number of capacity building works have been done. As you say rightly, critical institutions, mission critical institutions, not just central bank, but some critical SOEs, telecom, power, Ministry of Finance, for instance. We have IFMIS, a system that runs the entire government finance and other institutions. So creating capacity at these critical institutions, but awareness across all institutions is something that we've been doing. I see CEO and presidents of banks, driven by the National Bank. They have developed a strategy, created enough human capability, institutional capability, build firewalls so that the threat can be minimized. But also, there is a response to incidents, right? As we speak, every second there is a threat. We don't understand it that way, but as we sit here, probably our team is fighting off thousands of cyber attacks. So we've managed to fend off this is quite well. But really, as we are digitizing more, right? Now we talked about it. The entire transaction is going digital, dual, we said earlier, but that we have 18.5 trillion in digital transaction, the importance of building capability for cybersecurity even becomes more important. So I think we have more work to do here as well. That's why in 2.0 this is emphasized as one critical area of focus, and as you heard in the panel as well, this is mentioned. You need to continuously build strong firewalls so that you can make sure critical public infrastructure is intact and well protected.
Thank you. That takes us to our final letter on Bridge, which is E, and that is for enabling innovation and value-added services beyond payment. So the strategy proposes to establish a dedicated innovation unit within the National Bank. There's also several references to innovation labs, targeting communities that have sort of traditionally been disenfranchised when it comes to finances and the digital sector, the rural communities, youth and women. Innovation, though, requires a particular mindset, a willingness to fail, to challenge the status quo, maybe to kind of push the envelope on the rules. Some, obviously not me, but some might argue that this is at odds with the culture of how governments typically function, and particularly institutions that are regulators that need to be risk averse. What would be your response to that? Can NEB genuinely be innovative?
I mean, that's generally true. So let me start. Generally, this notion that, because it depends, think of how government is structured. The role of government is to be a steward of public assets, right? So the way you operate is through layered bureaucracies, procedures, procurement guidelines, policies. I mean, that is how government operates. I mean, probably you're contrasting us with the private sector, and maybe that's a little bit different. Private sector can run at speed, think outside the box, push the envelope, as you said. So that characterization could generally be true, but I am going to challenge you whether you think this government, the government I work for, has been less innovative than the private sector. I leave it to the audience. There is a term that is often repeated. Speed and innovation, fatarana fitnet, as we call it in Amharic. In fact, the government calls itself an entrepreneurial state, right? In the Madamar ideals. So I think we've pushed that envelope a bit. We've shown the world that, and look how this nation is being rebuilt anew with innovative financing ideas, at a speed that was unprecedented. And some private sector, when I hear the hush-hush saying, we have difficulty catching up with this government. They're running at a much significant speed than us. So, though that characterization is generally true, but you can also see that the government can be innovative, can be creative, can run at speed. That's what we want to do as a central bank. The idea of that innovative center sandbox is to bridge that gap. You know, in a bureaucracy, where you are only used to doing things through a certain bureaucratic layers, you need to create space for the bureaucrats. You're telling them, look, yes, I know that is how you do things, but this time around, for innovation beyond payment, think outside the box. I allow you. I mean, so you're allowing that through that bureaucratic procedure, saying it's a sandbox. So we allow you to see if they can build anything out of that sand. Let's try them out. Once we know what they've built, we can regulate them. So we have a regulation coming up, as you know. So I think my belief is that with this new mindset in government and with the dynamic, strong, young team I have at the central bank, I don't see why we can't be innovative. Check on me in a few years and see if that's not true.
Oh, thank you. Well, I'm glad to hear that because my job literally depends on governments being willing to be innovative. So I agree. I think there is a necessary and constructive tension that you want between the risk-taking and the innovation and inspiration on both sides. Thinking about the future, the implementation of the Digital Payment Strategy 2.0 is obviously a key priority for your term. What else do you want to drive as Governor of the National Bank? What are you envisaging for the institution?
Like I've said, part of it already earlier, we have a core mandate. You know, that always is there. Stability, right? It's a macro institution. Financial soundness, financial stability, price stability, both domestic and external price. This is at the core of the institution mandate. So this will always be a priority. So, and this is also foundational for the discussion we have. For that digital transformation, you need to have that bedrock of stability. So we'd focus on this core work. But I want the central bank to be an institution fit for this new century, you know. An institution that is willing to learn, to innovate, to adapt, to be creative, you know. If there is this notion that because we are a central bank, we've got it all, that's absolutely wrong. No, we haven't. Look at the digital space, you know, fintech, all this innovation. We should catch up, we should learn. We should create space for creativity, you know, productive innovation is absolutely important. So my vision is to see an institution that is pragmatic, a well-respected institution that won't flinch from its core mandate, but does that in an open, learning, innovative way, rather than through dogmatic approach. It won't be an easy task, I tell you, because it requires reorientation. Reorienting myself, you know, starting from myself, my colleagues, you know, entire government institution. But if the last 6-7 years is any consolation, I think we've seen that we can learn, we can adapt, we can innovate. So that's the kind of institution I want to see. But collaboration, and the third point, should be at the heart of it. Look how this conference is a big success because we are collaborating, we're working together. I strongly believe in that spirit. We are regulators of a very complex industry, but we should work with industry players in creating the right space for regulation, but for innovation as well. So, evidence-driven, data-driven regulation. You where you allow ideas to be debated, discussed, and then the best outcome is taken for action.
Thank you. Just before we wrap up, thinking a little bit more on the theme of the future, you are a father of 3 children. No doubt they have thoughts about what you do, and no doubt you are inspired by them. Could you share, could you share a little bit about what insights you gain from your children, from thinking about being a parent and having that necessary investment in the next generation? Like, how does that play out in the role that you do and in the reflections that you have about tech or how you show up to work?
Yes, yeah. You know, I have 3 kids, but you know, they on some of the issues they take a very different approach. My daughter, for instance, could not comprehend to the life of her why I would leave a very good, high-paying private sector job and work for government. She just can't comprehend it. You know, I tell her, you know, it's a bigger picture and so on. She doesn't. When I change job now, for instance, she said, "Oh, you change job. Is this a better paying job?" It's not about the pay. My daughter was talking. And it tells you the kind of thinking this generation has. And I think the middle one probably, I can see, has that virus, but hopefully he has. So he tries to understand. But through them, I see the challenge of the next generation, right? I mean, we talked about AI, technology, for instance. ChatGPT, she tells me, she's 14. So at times I cringe. I mean, is she going to just try and use ChatGPT for assignment or read, understand something and augment it for a certain difficult area? A tough one as a parent, right? So do you want to deny her access, or do you want to manage her access and guide her through? I'm sure most parents are struggling with this kind of thing. But that is also a challenge, at governance level. The ideas we discussed. AI, I talked very passionately about AI, but I also worry about digital colonization. I worry about social fractures, right? As I worry about my kids, whether they are using it to the extent that they should, or they are going beyond. So it does inform policy making. It does inform your outlook about the future. And the need, there is this word we always use, that the median is always gold, work amount Michael, as you call it. So the median center. So how do you strike that balance? How do you understand? How do you minimize the risk, but maximize the potential? So do I get challenged like all parents do? Yes. Does that inform that policy making exercise? Yes, it does. So I think we take it as it comes. We learn. That's what I said. We should be innovative. We should be open to ideas. We learn and we adapt to circumstance.
Thank you. I think that's a good moment to wrap up. It has been an amazing conference. We've covered a wide range of critical issues. There's going to be a wrap-up sort of call to action session. But from your perspective, what would be the one thing that you want people to walk away with after this event?
I think I want people to walk away encouraged, strongly encouraged that we are on the right track. We've come a long way, and we should shake hands, tap ourselves, each other, and say, we've done well. But we also should understand that this is a unique moment in Ethiopia's history. Chances of this sort come rarely. So it depends on how we use it. Do we squander this unique opportunity when we can leapfrog, catch up with the rest of the world, and probably in some areas advance? Or do we understand that this is such an important moment in Ethiopia's history for the country's transformation and give it the right attention, the right focus, the right mindset, so that we can all come together and transform this nation for good. And for those, in the financial digital space, I mean, clearly what we call the fifth revolution and so on is in our space. So I think people should walk out of it knowing that they are a lead. They are on the lead. The ball is in their hands, in their court. What they want to do with that ball, I'll leave it to them.
Thank you very much. Thank you very much for your time, for your insights, for allowing us to know you a little better as you continue in this incredibly important role. Your Excellency, Governor Eob, thank you. Thank you, everybody.
And thank you so much, Sanit Zaru, for moderating this session, the fireside chat. We're living in a very high note. Indeed, that was the cherry on top of all this delicious cake we've been having for 2 days. Thank you so much. Wow, what an incredible 2 days. EDPC 2.0. Well, we have the QR code. Do not forget to download it, because just a little secret we've been keeping away from you for 2 days. So the strategy is a draft. We do not want to finalize it without getting more inputs from you, our stakeholders. So please make sure that you read it, you add your comment, your feedback, and make sure that you engage with us in the upcoming stakeholder meetings. So that's why I insist on downloading it, so that we'll get the best inputs from you. And now let's watch a summary video of welcome you all to the second Ethiopian Digital Platform Conference, EDPC 2.0.
To welcome you to the second edition of the Ethiopian Digital Payments Conference, a platform that has become central to our national dialogue on how we modernize our financial sector and harness digital transformation for inclusive and sustainable.
It is a profound honor to speak at this important conference. Today is more than a discussion on digital payments. It is a moment to reflect on how far Ethiopia has come, and a moment to shape the digital future we want to build.
was day one. And today we have even more exciting topics. Today we will go on and start with an opening remark.
The second day of the Ethiopia Digital Payment Conference, EDPC2, marks a defining moment in our country's digital transformation journey. This gathering is more than an annual event. It is a national platform where policy direction, innovation, and industry alignment converge.
It's profound honor to welcome you to the second day of Ethiopian Digital Payment Conference. Today, we do not merely look back on progress. We celebrate a defining milestone in Ethiopia's financial modernization journey.
Wow, please give it up for the tech team. Great job. These 2 days were remarkable, and we covered everything from the agenda that we set out to do. 7 remarks and speeches, 8 presentations, 8 panel discussions, 2 fireside chats and press conference, and 2 launches. The first one was the National Digital Payment Strategy 2026 to 2030, the roadmap for 5 years. And the second one is the instant payment system, Ethiopia. And we have over 400 participants. Last year was 300. And I'm sure next year will be 500. Anyone from Asia? Anyone who came from Asia? Yeah, because I know there is someone from Pakistan. Yes, Asia. North America? South America? Australia? Antarctica? Well, Africa. So I wanted to see how far people have come. And if there is the furthest, maybe they will sit with me on dinner tonight. But it's okay. Next year, we'll have that competition. Who came the furthest? All right. The partners to organize this EDPC 2.0 are the National Bank of Ethiopia. Give it up for National Bank of Ethiopia. ITSwitch and Better Than Cash Alliance. This clearly shows that the Amharic saying, "Dir biabir, ambassa yasir," is true. For non-Amharic speakers, it means when spider webs come together, when they unite, they tie down the lion. And the lion in this case is the gap of digital finance. And the spider webs are each and every one of you. Thank you very much, everyone, for spending your 2 days with us. It's been such an honor and a pleasure to be the MC of this entire session. I look forward to see you all next year. So before we go, let's go have coffee. No, let's have a picture together so that next year we're going to show it on the screen. So everyone, please come forward. Your Excellencies, you come here, and everybody else, please join us here for a group photo. And after that, we go and have our last coffee together and take contacts in case you haven't done it. All right, thank you so much, and have a lovely evening. የመኪና ቁልፍ የረሳ ካለ whose car key is this? Good. All right, so please come here. So Your Excellencies, come up on the stage here, and everybody else, please come and join us